we'll get things started.
Hello. Hi, Richard.
Sultan,
Hi, Igor.
how are you?
I'm
Hello.
good. How are you?
Nice meeting you.
Same here. Thank you so much, and welcome to today's live session.
Yeah,
And my name is Chetan, and I'll be your host
okay,
of the day.
awesome.
Great.
I,
And mhm,
I believe
sorry.
we got Igor as well. Do I pronounce
Yes,
that right?
we have. It's Igor. Yeah.
Awesome. Okay,
Great. And I'm excited to have you both here. And just give me a minute.
no problem.
So, for our viewers, in today's live session, we have our experts here. That is trading coach Richard and Igor with us, who is like a reputed and seasoned forex trader, and they will be telling us something about like the strategies that people can apply on their trading and can gain some profits out of it. Hopefully,
Awesome.
great. So, Richard, over to you. Like, if you can just tell us something about you, your experience,
Yeah,
and a little
no
bit like.
worries. I've got about 16 years almost now trading experience. Actually, in September this year will be 16 years. Pretty much self-taught. I did work for a stint on a trading floor here in South Africa. Then delved quite a bit into futures afterwards, primarily futures. I did start with Forex in my beginning trading days. Then I was lucky enough to meet two really good mentors. I learned some options trading from one of them. It's something I still enjoy trading, some options on the side, but on the futures markets, not really so much in stocks and equities. So primarily I trade what I call a morning liquidity sweep strategy with the sessions that I do. I believe there's now the third one that I'm doing. And it generally happens between 9 a.m. and 11 a.m. Eastern, and it's mostly on the ES and the NASDAQ. So, yeah, a very structured sort of approach, a mechanical trading system. Don't use any indicators with it, although if you want to take some notes from here, it's possible to work in some volume if you want to use some volume footprints, charts, and that sort of stuff. But yeah, that's pretty much it. So I've joined Hola Prime as one of the coaches last year, done a bit of work with them, and this year kicked things off a bit more on a permanent basis. And that's pretty much my experience. There
Well,
you
thank you
go.
so much.
Hello, Richard. Hello, Chetan.
Nice
Thank
meeting
you.
you.
Hi, Igor. So we are excited to have you here, and Igor, I believe our viewers already know about you. But if you just give a quick introduction of yourself.
Hello, I'm 18 years trader, so I'm trading major forex pairs,
Mhm.
mostly euro dollar, British pound dollar. I'm using a lot of quantitative analysis in my experience because I'm a developer of the expert advisors last 10 years maybe, and this is my edge. However, during the trading, I use the fundamentals, technicals, and mostly I like to use relative strength index indicator, as all traders already know.
Cool.
Oh, great.
Nice.
So perfect. Thank you so much, guys. I'm excited to have you guys here, and let us just go ahead and start this session. And as I'm your host, just in case people have any questions, I'll let you know in between the questions,
Perfect.
and so that you guys can
Thank you.
answer.
Okay, thank you.
Great. Over to you guys.
Right, Igor, I don't know if you want to show us something, some charts. It's not much happening on my side yet. Maybe you can just show us what you're looking at, and then maybe I can do that quick. Hopefully
Okay,
something
for
picks up.
beginning, I can just make some recap because I just read a lot of news for today and the
Okay.
latest news. So I just found that there was a big Bloomberg report for today, and
Mhm.
I just realized that they talk about U.S. yields and U.S. dollar, and they suggested that the U.S. economy could be heading into a period of the slower negative growth, while inflation remains elevated due to tariffs. And in that report, they said something about recession. And after that, I see that the market reacted to that news. And after that, it was the end of the yesterday.
Yeah.
There was a lot of news related. I think Technometrica Institute for Policy and Politics, they talked about their expectations. There was a lot of news about Federal Reserve Bank, and Richmond President Thomas Barkley made some speech related to the inflation then and now, etc. And there is a lot of critique of the Trump's movements and talking about U.S. recession, and that all these moves that Trump doing can hurt more the U.S. than other countries. And I think that we have the fundamentalists on one side, and the other thing that we can see on the charts aligned. And because of that, I see that the US dollar is in the very bad shape. So right now, I can present, for example, just a moment. I will present US dollar currency. I think that
Okay.
it is the best thing to start today. Right now, yes. So, and as we can see, it's a really bearish move since the beginning of this week. And we had on Monday very big bearish candle. Today we have continuation, and this price level that I talked yesterday about 106.3 is broken right now. And for me, this can lead maybe up to 100. Of course, I cannot predict the market, but if we have this movement like now, right now we are very bearish for the US dollar. Please tell me, Richard, what is your opinion about US dollar?
As you were mentioning about Trump and all his policies and stuff, I mean, he's moving at lightning speed with like executing everything that he promised, and yeah, it's difficult. The dollar obviously did rally into 2025, and we've through the past 2 years prior to that, or even longer, heard that it's the death of the dollar and so forth. So whether this is actually just a larger correction, or actually, I can't say a starting point, because we've already seen that decline in the dollar index. But I sort of share your sentiments, thinking that there's some more downside potential on the dollar index for sure. I've been looking obviously at the euro, US dollar, the pound, US dollar. I don't know if you want to bring one of those pairs up there, because I don't really look at the Forex on my side.
Yes, please. You can show the screen.
If you can pull it up for me there, that'll be great.
Okay, I can too. No problem. I can open
just the euro, US dollar, for
euro
example.
dollar. Okay, no problem.
Then, I mean, obviously moving opposite to what the dollar index is doing. So I kind of think that even in euro and the pound, that we are probably seeing the beginning of a proper strong move to the opposite. Obviously, with the dollar index moving lower, but yeah, it's still early days. I mean, it's really difficult. One thing I did expect at the beginning of the year, when Trump took, well, I think it was a bit of a surprise for many, of him winning the election, is that I think we're in for a very volatile time. And we can already see that in the indices, which are mostly the markets that I follow, the US indices like the NASDAQ and the ES. And thus far, they have not disappointed on the volatility side of things. So you being the Forex expert, all I really can say from my side is that I do think the dollar index has got some more downside potential, is what I would say.
Yes, I see really downside potential. And today I just made short video for all traders, because today I made one trade. It was a live trade. I made, I think, a 10 minutes video about that. I will just show what I did right now. It was Aussie dollar move. So what I did is I create one buy order. So I made a purchase around 0.62 level. I put a stop
Okay.
loss to 0.608, and my target is pretty big,
That's huge.
0.69 level. It's a
Yeah.
huge, it's a 1-to-5 risk reward ratio. Of course, why I did this, it's because tomorrow we have a GDP for Aussie. We
Yeah.
expect very good news. I think that GDP will be better for Aussie. And on the other side, all these weak US dollar, strong Aussie, and I just decide to create this a long-term
The trade.
trade with a very low risk. So
Okay.
I just want to see what will happen there, and this was my trade. I think the trade of the week. So we will
Very
see, of
nice.
course, what will happen.
Very nice. Yeah, if that pulls off, it's going to be huge. Very nice. Awesome.
Of
Cool.
course, I'm ready to correct my order if I see some disappointed news for Aussie dollar, because in the past, because if we analyze last 2 years, I think that economists from Australia make a lot of mistakes. They made a lot of mistakes, and I think that they can repeat that, because they're very often, I think that 80% of the time, we have different results than expectation. It's really strange, because in US we know that almost 80% of the time economists predict what will be the percentage of the GDP or
Yeah.
interest rate and everything. But in Australia, they really have a problem with that. So because of that, I need to be caution, and I will wait tomorrow news to see
So
what will happen
what
there.
time is that coming out, Igor? Because that's Australia's time, right?
It's early morning on my side. I live in Europe, so it will
Okay,
be
you're in Europe.
around 1:30. Yes.
Yeah, I'm in
So
South
it will be
Africa,
very
so we
early.
pretty much same time zone, I think. So would be interesting to
Yes.
see. Let's see. Hopefully it works out for you.
Yes.
Awesome. Right, maybe if I can share my screen, if you don't mind, if you've got anything else to
Of
show
course.
there,
Of course.
then I'll just
Yes,
quickly
please. Yes,
show
please,
you
Richard.
what I'm looking at on the NASDAQ. Let me just take the screen back quick. There we go. That should be showing right now.
Yes.
So what I basically do is what I wait for what they call morning liquidity sweeps. Generally, if price, and this is on the NASDAQ, takes out during the 9 a.m. to 11 a.m. time window a previous low or high, whether you want to call that stop running or whatever the case might be, followed by a reversal. Now, you see these lines that I've drawn in here are pretty much, this was yesterday's. We've had everything fall in line for a little strategy to take along there, but price didn't reach an area I wanted to trade. So unfortunately missed that. In hindsight, obviously a good thing, because price just bounced a little bit and moved lower again. But you can see all these previous days, if you look at these time zones between, or time window between 9 and 11, is generally where you get these reversals. Also, when your stock market opens, obviously with 9:30, is generally when you get a reversal. So what I mean by the sweep is the price either takes out overnight high session low, or high or low, sorry, or previous day's high and low structure point, and then they generally get a reversal. I mean, this happens all the time. We had that on Friday. It was 27th. We had a reversal there, and it happens all the time. And just knowing that that occurs all the time, you can then, well, I did go and create a strategy around that. So I would like to see break of previous price structure points after a reversal. I like looking for fair value gaps if that forms during a reversal, and then I use those to basically enter into a trade. So that will be my trade location. So a very structured approach. There's quite a lot of things that need to fall in line for me to take a trade. So I don't always have a trade every single day. So I'm pretty patient with that. And you can see I'm here on the 5-minute time frame, but I will switch to a 1-minute time frame as well, and then I'll use that as my trade execution time frame. So I'll trade multiple lots as well, and generally like to take off half of my lots at a 1-to-1 risk-reward ratio, risk-reward ratio, and then try to keep the rest in the market, see if I can get a runner there. Quite often, if the NASDAQ runs really nicely, it can be quite volatile. Then you can quite often squeeze out nice, at least a 1 to 2 or much higher than that ratio out of it. So it's a day trading strategy. I don't hold these trades overnight, but it's not a scalping strategy per se either. So generally holding a position in anywhere from, I've been in trades for 5 minutes up into, I think, average about 25 minutes roundabout there. So what we basically want to see here is, and this is why there's not really anything for me to do at the moment, but just to give you or the viewers a recap of, or show my trading plan, is that price has now obviously entered into the 9 a.m. to 11 a.m. Time window. If we see a continuation lower and price breaks this previous low, followed by a reversal upwards, then I'll start looking at the additional steps that I need to see, like price structure break. What I mean by that, I'll then switch to a 1 minute time frame, but I don't really have to do that right now. For those that are interested, let me just get my path tool out. Price structure break in a downtrend obviously makes lower lows, lower highs. So let's say price does this. Let's say it potentially makes a new low and then breaks back upwards again and takes out a structure point. Oh, I don't know why I did that with. That is another signal that we're potentially getting a change in trend. So I don't really have a bias if I want to be long or short today. Is pretty much what price does, and if all my steps fall into place. And once that occurs, I want to see a fair value gap that forms prior to price breaking that, and then basically a retest of that fair value gap. Also like to call them acceleration gaps. And then that's where I'll enter into a trade. So that is the morning liquidity sweep for those that do not know yet. This is the third presentation or live trading session that I'm showing this. On the very first day last week, Wednesday, we actually pulled off a very nice trade. So for those that are interested in it, we do have recordings available on our YouTube channel, I believe it is. So you can go rewatch that there. Maybe sometimes if you join a little bit late, then that's maybe a good idea to go and check that out. Because sometimes when these setups occur, they happen really, really fast. And I almost missed that one on Wednesday last week, but luckily we managed to take it, and it was a really nice trade. That's pretty much what I'm waiting for, Igor.
Excellent. One question for you, Richard. Do you use any special time moments when you enter into trade on some opening range or the US Open or something like that? Do you use anything of that?
So I just trade. I want to see the setup occur between 9 a.m. and 11 a.m. Because as I've shown you historically, you typically get your reversals or like a low for the day or a high of the day during that time window. So we still got about, I think, 10 minutes before about 11 minutes before the stock market actually opens at 9:30. And that's quite often where you'll see a lot of volume obviously coming in. And in my situation here, potentially for me to have a trading plan here, is I want to see price take out this previous low. And rather than just tanking, which it probably could, we never know, I want to see a reversal back upwards. And during that reversal, when price then breaks previous structure point, we have a structure point up here now, then I want to see fair value gaps form and use that as my trade entry location. So to answer your question, I want to make use of I'm going to say not a fact, but the repeatable occurrences where price actually make nice reversals during this time window. So yesterday we had a beautiful one here, and we had one to the upside as well. This one didn't set up because there was a fair value gap on the 1 minute time frame that price just collapsed. It never tested it again. If I want to zoom into this one, for example, from yesterday, just get that ready. Go back all the way to it. Here we go. You can see that price took out round about so there was actually at the 10 a.m. mark, it took out the actual overnight session low.
Yes.
Now, as that happened, it started bouncing around a little bit. And it was at this point where you can see just prior to this low, there was a little structure there. If you go to the 1 minute here, price was making lower lows, lower highs. It messed around. It actually broke that structure point, but didn't give me a fair value gap anyway. And then finally, it did break it. It actually closed above it. And here we have a fair value gap, that sort of like pinkish rectangle that I drew here. Now, as we were watching this yesterday, I wanted to get long if price were to retest that. And it was actually 2-3 minutes after price broke above that structure point, and then we had a nice bounce upwards. So that did not occur, and I think we closed the room off at 10:30 because we're only on for an hour and a half. But slightly after that, you see we had a retest of that zone again with another decent bounce to the upside. And that will typically be an entry right there, using the fair value gap as a trade location. But yeah, yesterday, even if I did get into this trade, probably would have just taken a 1-to-1, would have been at break even at that point. As price exited that time window, you probably would have been out already with a very small profit to show anyway. So not the best of a setup, but it would have yielded something at the very least. But that's pretty much what the strategy does, Igor. I don't know if that explains your question properly for you.
Yes, really very similar that I do, for example, for a British pound dollar and euro dollar, because this move that we have, for example, testing of the previous session low, for example, it's beautiful to enter into buy trade and vice versa. So it's a really good move.
And which time, may I ask, would that normally occur? Did you say on the
I'm
euro,
trading.
US dollar, pound, US dollar?
Yes, I will just show you right now my screen of the British pound dollar. Just a moment. I will share the screen like this. I hope that you see. Yes. For example, I usually like to use 30 minutes of the British pound dollar and euro dollar, and to draw the trend lines on a relative strength index indicator, because that trend line gives me just the strength of the market. And for example, right now we just touch the trend line, and this can be very good opportunity to enter into buy trade. Of course, I want to see how we'll close in next 6 minutes, for example, this setup. However, if I see that the price started going up, this can be really good to enter into trade. Actually, for British pound dollar, we have some levels that repeat itself several years. Actually, from the 2016, we repeat some levels on the intraday, like for example, so often that it's really unbelievable. So for example, I know that for today the important levels will be 1.27, 27.30, 27.60, and the price support will be between 1.27, 27.1. For example, right now we are very close to the support, and I can really easily create good risk reward ratio, and we already have that. Just to put a few more lines, just to show how that looks like. This is this should be 26. There is some problem a little bit with just a moment to put one more horizontal line like this. Okay, so what I want to say is, of course, first I want to tell, when we use indicators like relative strength index, we always need to wait to finish the cycle. For example, because it's a 30-minute chart, we need to wait to be, for example, right now 9 and 30, for example. And only that we can conclude, is it breakout or not breakout. Usually we can see something like this. Sometimes we see the breakout, but when the half hour is finished,
Yes.
there's no breakout anymore.
Yeah.
So it can be
Goes up
some
maybe.
kind of repaint, and because we need to be patient when that happens.
Mm.
However, there is one very important thing. If we analyze the previous data from the 2023 up to now, it's 2 years, for example, price between 1.27 and 1.277, we have, believe or not, I think it's about 80 or 90 cases. So it's really so often price were in this range, and these
Okay.
levels play so often the same way. So, for example, if we have a bullish trend like now, price just go down very near to 1.27, and they go to 27.30, 27.60, then go again to 27.1, they go to 1.2790, and cetera, and
Yeah.
cetera. So price
Mm.
just going up and down all the time, and play around these levels. Of course, for example, if I enter just now into trade, I will put my stop loss just below this blue line, about maybe
Okay.
1.2675, and I will try to target 1.2760, and
Yeah.
try to make one-to-one. And usually I have very good risk-reward ratio, because I always wait to go on support. And
Yeah.
just British pound dollar is very good, because it has some kind of great volatility.
Yeah.
We have really, really good push, either upside, either downside. Sometimes 30 pips, we can just in 15, 20 minutes, we can just have that 30 pips very, very fast, and close our trades and enjoying trading in that way. It's not a slow burning currency pairs like US dollar CAD, or
Yeah.
Aussie dollar, Kiwi
Mm.
dollar, when we sometimes need to wait a lot of time to reach the target.
So that
One
would be like a day trade for you. Do you actually enter on the 30-minute time frame as well, or?
Yes, this will be usually one session. For example,
Okay.
my trade is usually finished during the, if I open in the London Open, it will finish
Mm.
during the Euro session, for
I
example.
got
And
you.
in the
Okay.
US session, I can open another trade.
Mhm.
Sometimes I need whole day to finish one trade.
Yeah.
Sometimes there will be no trade. It
Mhm.
depends of all these situations. However, there is one trick that I realize when I just monitor the market. For example, sometimes we reach few pips to the target, and we don't hit the target, and the
Yeah.
price just fall down like this. When I see that, there is a high probability that price will go to the support and try again to hit the target.
Again.
And this is the something that I see very, very
Mm.
often when
Mm.
I trade a major forex pair,
Yeah. So just
especially
to
US dollar cross.
butt in there, so you also follow, or you study the markets, and you know what repeatable behavior basically
Yes,
occurs on these markets, and then use that to your advantage.
yes, yes. This
Yeah.
is the pattern recognition is a really, really important. And
Yeah.
one thing that you just mentioned, the very similar strategy to your strategy, is that we have around the midnight, we have the low and the high, and usually price start to always touch the, if you have a bullish trend, Asia low or the Asia high. And this is the something that I like to trade during the
Okay.
London Open. And because
Mm-hmm.
in that half hour we have very volatile market, and sometimes in that 30 minutes we touch and the low and the high sometimes.
Yeah.
And it's very good. Even if I have a wrong bias, if I buy the Asia low, I will certainly have a good setup, good
Yeah.
position, and I can really be a little bit comfortable when I trade. So it's very good in this
Gotcha.
way. However, right now, for example, I don't like this slow movement right now, because
Mm-hmm.
I wanted to see a stronger push up. So I will just monitor what will happen. There is a chance maybe to test this support before we try again to the 1.2760. So sometimes this is the most difficult part of the decision making, when I'm on the trend line and I'm not sure will the price will go up or down or something like
Yeah.
that. But there's no problem. I feel comfortable because I have a decent risk reward ratio, and I have a decent support. I believe in this support. If this support fails, no problem.
Yeah.
I will wait for another setup. No problem. I just talked with traders yesterday with a poll, and some I promise that I made to myself, because the last year I had a lot of bad trades, in the
Mm-hmm.
way not losing trades. I put a lot of times a break even, put my stop loss on the entry position, and when I analyze all that trades, I figure out that my edge was more than 70%. So I
Oh
was
wow.
70%
Yeah.
right, and I closed all
Yeah.
their trades without any profit, just because I was afraid to lose.
Yeah.
So this year I said myself, I'm prepared to lose. I will lose, no problem. And I that pessimistic approach give me some kind of psychological relief. Yes.
Yeah. I mean, it's also, and this is really interesting. I mean, I think for beginner traders as well, to hear this from someone that's experienced, we even make mistakes. If you want to call it mistake, maybe not. Maybe it's just being human. So it's all about confronting that. Also, obviously, looking at historical performance, what went wrong, and fixing it. Not having that ego to like, I'm going to continuously do the same thing over and over and over again and expect different results, which is what a lot of traders do. So yeah, good on you. I mean, for me personally, with this strategy that I'm trading, I usually just have a fixed target and then I'll be happy with that. But yeah, also try to also move my stop quite soon, too often. And although I take a 1-to-1, even on that second contract, I'm talking contracts here, but on the lots that's still in the market, I prefer to give the market as much space as possible to do its thing, because it's a real punch in the gut when you sometimes
Yes.
get stopped out, and then like literally it reverses directly Murphy's law after you got stopped out, and then does 100 point, 200 point run, which is it can be quite not nerve wracking, but yeah, a punch in the gut, that's for sure. So I'm also just looking here at the Nasdaq. We did have the stock market open 4 minutes ago, so price has declined again. Can I quickly show my charts?
Yes, please. I just want to see.
Present share screen. There we go. So we can see price already tested this previous low. I wouldn't really call this an overnight session low, but since price has been, moving low and such a strong downward trend here, at least on the 5 minute, it did create a bit of a double bottom with this previous low over here. So what I want to see here is, for this strategy to work, it's not really a strong continuation, although that can obviously happen. Markets will do what they want to do, not listen to me. But ideally, want to see a bounce back up. Now, where's the previous price structure point before this low? It would be at this high over here, before this low, right?
Yes.
You need to see a break back up from there. And as that happens, I want to see a fair value gap ideally form prior to that breakout. And then you want to see a retest of that gap and use that as your trade location. I just quickly
Yes.
want to see what the actual low was here of this chart. Let me just get my settings right. I am using, I think it's the C Trader time frame or chart here. But we did have a bit of a break of that low without looking at the data. That could potentially be what I'm looking for here. It's not a big level that's been taken out. It's just a lower low again. But if we see now a break above and a close, well, not necessarily a close, we need a 3 candlestick pattern to give us a fair value gap. And for those that do not know what a fair value gap is, as I mentioned, it's a 3 candlestick formation where you'll get a gap between the first candle and the third candle. Generally, your second candle is a long-ranging candle, and there's a gap between the wicks of the first and the second candle, obviously depending if you're looking at a bullish sort of fair value gap or a bearish fair value gap. So let's assume this candle now closes here somewhere. And I need another candle, and this is on the 5 minutes, so I should actually be on the 1 minute here already. We can see price is actually breaking that high at the moment. And as I'm talking a lot of bull here. We potentially have a fair value gap there. It will only be a fair value gap if this now closes. And we got how much minutes? We have about 20 seconds left on that candle. If this wick stays where it's at or moves a little bit lower and there's a gap there, and there we get that gap, I'll use that as my trade location and I'll place a buy limit order there. And in this situation, I would like to place a stop potentially at this low, 2217. So I just want to get my stop loss in at least. And a good little cancel order, make sure everything is fine, buy limit order on top there, and that's what I'll do. So I actually have everything lining up here. Not ideal because this is just so close to the actual opening, half an hour before my, sorry, not opening, the trade window, the start of my trade window, but it is what it is. So I'll be willing to go long at the top of that fair value gap. So I'm using that as a trade location. If you want to be a bit more conservative or get a slightly better entry point, a lot of guys that trade this type of strategies, not particularly mine, but they can, for example, go and place their buy order in the middle of the fair value gap as well if they wanted to. But we got a break of that previous low. We got a bounce higher, and we got a break of a price structure point, potentially a change of character, meaning that this could potentially be at least a temporary end to this downwards move to the downside. Potentially, I would say.
Potentially, yes.
And quite often, these fair value gaps act really well as support and resistance. They get tested quite often. So if it does test that upper limit, I'm long now 6 contracts. All right, so obviously time will tell if this is going to work out or not. I've accepted the risk. If we look at just roughly the amount of ticks, let me just get my date range out here. From the entry, come on, price range. I'm actually going to start using TradingView as well. It's just that I've been asked to use this platform. We're looking at around about 106 ticks. That's quite wild on the NASDAQ. So what I want to do is I want to place a 1-to-1 ratio would be around about just under the 20,437 level. So what I would like to do is place 3 contracts there. This case would be a sell limit order, take off half of my positions at that level. Should price reach that? All right. but it might not. So it is what it is. Last week, Wednesday, when we took that trade, I nearly got stopped out, and thankfully, price reversed back upwards again. But that is the strategy. Let's hope we get an actual move back upwards again. So I'll take half my contracts, and I'm talking contracts because I'm more of the future side of things, off at a 1-to-1. Then I'll reduce my remaining position to midway between where I entered and where my original stop loss was. So I don't go to break even too soon. Trying to give the market still as much space to move around in without getting stopped out prematurely. And generally, when price reaches a 1.5 or 2, 1-to-2 ratio, that's when I'll start aggressively trail my stop to break even, and on a 1-minute time frame, even decide to trail the stop below the low of candles moving to the upside. If that happens, so I'm in this trade now, let's see what happens. Not looking great, but let's see what happens. Right, Ego, what's happening your side? Did you see any trade setups there?
Yes, I will just share to see what happens on a British pound. Just a moment.
Yeah, this is looking really weak. Might get a
So,
stop out.
like I said, we are on the same place. The good thing is that we had a price around 2.2705. It was the support just in the middle of your session, and I just want to see what will happen here. Very often, price hit this level and retrace and start to go up. However, what I don't like here is that this relative strength index trend line looks like a broken, and this is something that it's not good. Of course, I need to see next 15 minutes because it really can change the shape in just the 15 minutes. And this is the US Open, so this is something that we need to monitor and wait. But I can tell you one thing, that every single day when I trade, I always try to have a bias, and I try to find some area where there is a bullish bearish invalidation point. And for example, for British pound dollar right now, it is this level 1.2680, and this level is something that I can tell, okay, on intraday level, I'm bullish above this level, I'm bearish below this level, for example. Of course, I want to be bullish, and it's good if price just reach support and start to go up again. And I will, like I said, in these circumstances, either enter into trade, either wait a little bit more and wait what will happen. I avoid to trade on very low time frames here. Sometimes I like to go on a 15 minutes chart. It's a similar and it's okay. But on 5 minutes and 1 minute, I avoid to trade British pound dollar because it's a little bit too volatile, and I, because of that, try to avoid any kind of trading there. So this is the usually my strategy. Of course, as you can see, the most of the day I passing in waiting the price to come some level that I want to price be. So it's a little bit boring, but this is this is trading all about. So there's a lot of excitement. So I think that the scalpers maybe have that kind of excitement, but in this way, there's no.
I used to scalp a lot. I can't do that anymore. It's too much for me, to be honest. Too much stress. I seem to lose focus the older I get as well. So I prefer things slow. And yeah, I mean, it's just discipline again, right? So you know what you want to do, but things need to work in your favor, or you need to see what you need to see before you get into a trade, right? So I think a lot of traders have that misconception that there should be a lot of action, and let's say they're
Yes.
trading and nothing happened. All of a sudden they want to put on a trade because they haven't traded and they're forcing a trade, and then that is just the wrong thing to do, in my opinion. Trading because you think you need to trade is, and not following a strategy.
Yes, overtrading is a big problem in trading. I
Yep.
think the number two problem. The number one is risking too much, and another thing is overtrading. Yes.
Yep.
So I just want to tell one more thing related to trading. As sometimes, like I always try to, for example, if my bias is bullish, to buy, if my bias is selling, to sell. But sometimes I'm ready to go against that, and I'm ready to, for example, to buy on, to sell on resistance. Sometimes I'm ready to go against the major trend only when I see that the standard deviation is too extended. So I will just show you, this is my little strategy that sometimes I'm use when I don't have a lot of trades to do, and
Mm-hmm.
I feel comfortable to go against the major trend. This is the mean reversion strategy that I like to use. So what I do, I go to the of course Bollinger Bands, and I choose the typical Bollinger Band, just to change the colors a little bit. I will put here a green, and here I will put the green like this. And then I add another Bollinger Band, and I will just explain why I'm doing this. This is the something that I use when I want to avoid over trading. This is the way how to avoid if I want to trade. So what I do is, this is the, here I will put a red one just to make a difference, like this. And what I will do here, I will change the standard deviation. So Bollinger Bands is very simple indicator. It uses a moving average 20, and standard deviation bands, or usually default settings is 2. What I'm doing, I create one standard deviation number 3. And why I'm doing this is because standard deviation is with the standard deviation 3 is a very rare signal. And what I'm looking for when I want to sell, for example, just to see, maybe to go to some lower time frame, just to show
Mm-hmm.
how that looks like, to have more setups there. Here, for example, here, so we didn't touch there. I want to touch the standard deviation 3. I want to lower or higher Bollinger Band. So, for example, here situation, it's March 4 at 4 a.m. in the morning. For example,
Yeah.
we touched the standard deviation. I wait the price, the candle close about standard deviation 2, enter into trade, put the stop loss just below the last low. And
Yeah.
what I'm trying to reach is a standard deviation 2 in another direction. And this scalping strategy sometimes can be beneficial for me, because of course I risk very small amount of money, and it's a very rare signals, because especially for major currency pairs, the standard deviation 3 is not something that we can see very often, as you can see either on the 5-minute chart. And really, I feel comfortable when I trade this. And this I'm using only when I'm ready to scalp. For example, if price went, for example, here and touch this level here, 1.276, and touch this red line here today, if that happened, I would be ready to sell and wait the price touch, for example, the level at 1.2730, for example.
Okay.
And that will be, risk 5, 6, 7 pips risk and the 30 pips profit. So it's
Okay.
very rare signals, but I can achieve very, very big risk reward ratio, very big risk reward ratio. And it can be applied on any kind of time frame, any kind of time frame, just to see, do we have, for example, here, we have, we touch, for example, the lower band and we went up,
Yeah.
just to see
Big
any other
bands.
example here. Here, for example, we touch, we didn't touch, he didn't touch, yes. Like I said, it's very rare, but when we touch standard deviation free, it's sometimes I'm ready to go against the main trend, but I try not to do very often this because it's not comfortable to go against the major trend, especially when I have an opening range. Then maybe it's not smart to do that. But if I see that we have oversold, overbought market, and we reach a standard deviation free, sometimes I can try to do mean reversion. And price will start to go to the mean, to the simple moving average 20 usually, but I'm ready to wait to touch this level. And in a mean reversion, if somebody like a mean reversion strategy, they know if you go too much high or too much low with a standard deviation free, maybe 4, after that usually will go completely different trade in a other direction. And this is something that I see very often when I trade a major Forex pairs. Please tell me, Richard, do you use any mean reversion strategy when in your trading style?
Well, with the not with this particular strategy, but when it comes to scalping, then I typically like the, I won't say trading necessarily when it would reach that, let's say, third standard deviation or second standard deviation, but I quite often, when I do a bit of swing trading, I like to try to figure out where the end of corrections might appear. I like using market geometry with that. I pitchforks and channels and those sort of things. But it's a great, for example, using a Bollinger Band. Let's say you believe you're dealing with a correction that might be coming to an end, and at the same time, on a lower time frame, you have, for example, price at one of these standard deviations. So at the extremes, and that's just an additional layer or of confidence, can I say, that price might be actually getting ready to reverse. So definitely, there is definitely a place for it in my strategy. So, but with that, I generally do a bit more of a swing trading type trades using market geometry, looking at patterns, corrective patterns, and then when it actually comes to entering, yeah, mean reversion, see if prices are at extremes, and then use that additional information as a bit of a confidence boost to get into a trade.
Nice, nice. And yesterday we just talk a little bit about strategies for ourselves and for other traders. And Paul yesterday talked about divergence, and we agree that in crypto market and in the major forex market, divergence is very good sometimes to use. And But I made concern about indices because in the past, when I find, for example, bearish divergence, I had a
Mm.
problem because the price just going up after that without any problem. And
Yeah,
I just want to ask you, because you're expert for indices, what do you think about using divergence and trading indices?
like momentum divergences, for example.
Okay,
Yeah,
okay.
if are you talking about divergences, like in momentum divergences, those sort of things?
Yes, yes. Those, for example, you can use some
Yeah,
oscillator and a
as
real
you
price
as you probably
and
know, if
compare.
you're dealing on the day with a very strong trend, I mean, the Nasdaq can be an absolute beast with that, where you just have very strong one directional trends, and you're thinking it might be reversing. If you don't approach that properly, then divergences can, for a very long extended period of time, basically tell you prices or momentum is actually drying up, whatever the case might be, when it isn't. You can clearly see it on the chart. So maybe just one extra layer that you can use as part of a strategy, but definitely not a sole indication that I would personally rely on when trading the indices.
And when you trade indices and you decide, for example, for some swing trade sometimes, which triggers do you use usually?
Well, I like to follow, for example, what I've been showing you here. This is my main
Yes.
strategy. The reason why I trade this is because it's nice afternoon time in South Africa. I'm in South Africa. So this
Excellent.
is now happening between 4 and 6 p.m. And, it gives me that time to go and focus and trade the strategy. Now, I think when is it? The 9th of March? I think it's on Sunday, right? So the daylight savings, they're going to move the clock forward or backwards. I can't remember how that works. But it's actually going to be an hour earlier for me. So I can then trade the strategy between 3 and 5. So this is my main strategy that I like to follow. And as you've seen, it's more of a price structure type of strategy, not relying on too many indicators. But that is, focusing just on the day trading side of things. In my own personal accounts, on the different accounts, for example, I can trade options, for example, or I like to do a bit more larger swing trades, as I mentioned, using market geometry. Not a lot of people actually use that, but are probably familiar with stuff like pitchforks, looking for areas,
Yes.
zones of confluence. We can use a bit of volume profile and that sort of stuff and then drill down into a potential smaller time frame to actually execute a trade. But always considering what your risk might be and always trying to keep that risk as small as possible with a proper decent risk reward ratio. Well, that type of swing trading, if you nail the end of a correction and you believe it is the end of a correction, you get in, and the end where you believe, because you never know, obviously for sure, if that end of that point where you're getting in, or the trading, or end of the zone that you
Of course.
actually identified, is far enough away from the high from where the correction, or the low from where the correction started from, you can quite often have a really, really good risk reward ratio of often over 1 to 5, 1 to 6, sometimes 1 to 10. And again, it's those type of trades where you need to be quite patient, because you have 3, 4 that might not work out, but you have a very small risk on it. But when you do get those nice big moves, you can ride trains for quite some time, which is obviously where the big money comes in, or profit. So yeah, basically this one I'm showing you here, guys, I'm still in that trade. Nearly got stopped out, but hanging on a thread here. It's just basically price action based, if that makes sense. And also dealing with that, the occurrence, knowing that you normally get a reversal during that time frame. But it ain't looking good. I don't really have too
Yes.
much confidence in this trade at the moment, but we're still in it.
Excellent, excellent. My British pound dollar just just keep one price and no movement at all, which is good. Like we are trying to consolidate right now, and maybe we'll get support here and just go up in the near time. We will see what happen. But right now, you give me a wonderful idea what we can do,
Okay.
especially for the US dollar. I will just show you what my thoughts are is if I go here and just to close this Bollinger Band indicator,
Mm-hmm.
okay, what I can do is I can go on a daily chart and I can go to the just to find here to the pitchfork, and
Yeah.
I can go to the beginning of the 24 year.
Mm-hmm.
Uh, it was something here approximately, and I can find the high and and we will get something like this. So like we see, this is the something that I really like to see. Why? Because if we make analysis for last 50 years, we will see that this level here around 1.28 and 28.50, for example, it's so important levels for British pound
Yeah.
dollar, because it was the in the past a big decade and yearly resistance, yearly support, and repeats itself all the time. And right now we can see, for example, for this year, that this is some kind of medium price. And it's wonderful how all these indicators and tools that we use in one moment align to each other. Even if we
Mm.
use Fibonacci
Mm.
retracement, even
Mm.
pitchfork, either whatever we use, on the end we get the actually the same picture. So
Yeah,
this
or
is
a
the
confluence
some.
between different types of analysis techniques, right?
Yes, yes, yes.
I just want to quickly show you. I mean, I've got my practice sort of trading view chart on the side here. You keep on going, and I'm just going to quickly look at a few instances using pitchforks and show you a little bit what I like to do on the market geometry side of things. So please go, Igor. I'm just going to pull up another chart here, and I'll tell you when I'm ready. So if you still
Okay,
want
no
to
problem.
explain
I will
what's going
just
on,
do the same thing for US dollar, for example, just to
okay?
see what's happened there. The same story, but I think it will be very similar. Um, if we go here and just find beginning on the 2024 like this, and we find
So using the beginning of the year almost.
the highest price, this other price in the from the 2025. Anyhow, we can see how the price very similar to British pound dollar. We are very close to the median price, and that price will be around
Yeah,
105.6
that's the
level.
medium line
So
there.
it was the support in December, for example, for US dollar, and we are reaching that price. We are very close. So right now we are in some very important moment, I think,
Yeah, for
because
sure.
this can be interesting movement after this if we break this line.
Interesting.
Did you find, Richard, some excellent chart to see
Excellent shot.
use
I'm
of
trying
the
to cherry pick charts here for you because I'm also trying to look at the pound US dollar while nothing's happening on my side. Yeah. But I mean, I used to keep very long range charts. I can look at the euro US dollar. Maybe there's a better example here. Sorry, I'm looking at this side of the screen because I got three screens in front of me. But please, I'm just trying to see if I got something good to show you
okay,
here while nothing's happening.
okay. Just to tell. So right now, when we analyze the US dollar index, right now, we see that we actually didn't break that support easily. We are somewhere there. So
Yeah,
it's not so many clear picture when we just to change a little bit the angle using a pitchfork, for example. We are still in this bullish part of the market. However, we really have a nice bearish setup here. And if you look, the trend line is like this, something like this. and we can go down days, maybe months. So, and fundamentally, it is everything aligned, because a lot of economists talk about this situation. Neither America is in good position, neither rest of the world. All these tariffs and all this fight that we have in economy, there's no clear explanation. Maybe in the books, if we analyze the economy from the books, when America put the tariffs to other countries, that countries should suffer. But in this case, when this so complicated situation and the war in Ukraine and problem European Union and China and everything put it together, it's so hard to see what will happen here. So
Absolutely.
I think that we are really now on very important level, and I think that we need to see that this red line right now on the chart should be broken, and only then, if we go to the 100 level, something like that, that can be really big push for
Yeah.
all currencies against the dollar. So we will see what will happen, but
Right.
I think that yes.
Sorry, I'm not trying to interrupt you. So I found that on the Euro-US dollars, I had to redraw it because something I've been having on my charts for quite a few years, especially from Pitchfork's perspectives. Can I quickly share that with you?
Yes, please. I would like to
That
see that.
one. Cancel. Oh, I want to share a window. This one over here. Is it not showing up now? There we go. Took a little while. I mean, this is really long-range stuff here on the Euro-US dollar, for example. I've had this type of pitchfork on my chart for a very long time. And yes, this is in hindsight. But if you just go and look, generally pitchforks, you need to select 3 anchor points, right? And then you've got different settings like your shift pitchforks, modified pitchforks. This is a standard pitchfork setting, which Dr. Alan Andrews used. And just using the 3 most prominent anchor points, in this case, the lower low, lower high. I mean, again, this is a very long range chart at the moment. This is typically what you want to see. And if you swing trading, I can be quite patient when I do this sort of stuff, is, expect potential support and resistance coming in areas. Like, look at that beautiful touch there. I didn't trade this. It's just visually pretty cool to see and how these type of things work. You can see price broke below the median line and tested, and this is what we call a flush and a retest, or kiss goodbye. And this whole entire move ended when it actually hit the lower median line of this pitchfork. Made it all the way back up a median line, back again. Try to get above it quite a few times, breaks, retests, and it fell back into that now. So this is something I'm looking at the Euro-US dollar at the moment. Look what it's trying to do. And this is actually on today's high, the current candle's high. It retested that upper median line again. So this is the kind of thing a lot of traders are oblivious to it. They don't know that there's what I call angular support and resistance areas that could be potentially, there that you're not aware of. And this is a lot of things. You look at market geometry, you look normally at angular support and resistance areas. So, for example, this is what we call an overthrow here. If I were to take, let's say, a ray, and I attach it to that high there and draw it at the same angle as these median lines, go and grab it and extend it to that area where it overthrew it. Dr. Alan Andrews said the next time that price revisits or overthrows the main median line or the pitchforks, it will typically reach the same sort of distance that it did before. And this is where you get these lines. You've got support over there, we had resistance, and things can get quite messy if you wanted to do this type of analysis. And it's very important that you don't go and try to draw too many lines, because you'll start confusing yourself. But what is very important for me is to keep a bigger chart like this with a simple pitchfork, just using the 3 most prominent anchor points prior to a very prominent low that occurred in September 22. And you can very clearly see how price has been jumping in between these median lines, and especially recently. And this can also help you quite a lot with your type of expectations or bias. Let's say, for example, we were saying that we expect the dollar index to potentially get worse. For me, if it clears this level, I think we got a good chance that it's going to, currently, because this is angular, right, potentially towards the next level, or that next angular line, which it overshot previously, which I've just shown you, this red line over here. And it tends to gravitate between these angular support and resistance lines. So this is the actual chart I wanted to show you. I mean, you can really go and play around with things. Very important that you don't go and draw too many of these lines, but quite often, and I would like to switch to a shift pitchfork here. Very close to that upper median line, we got a very close zone of confluence, which in my opinion would be a very strong resistance point for the euro US dollar in this case to overcome. But where's my geometric shapes here? If we do get a break above that area there, so it's an area where you have a downtrending upper median line of a very long-term pitchfork, and you got this one to the upside that's actually tracking this move to the upside at a starting point of a low, Jan 25, higher low, and it's getting very close to that area. So this is the kind of thing I would like to see. I wouldn't necessarily like to trade long into those areas, just knowing that they are higher time frame, very strong resistance levels. But using this type of analysis and looking at what price action does at these zones, if we do get a break, and I haven't used TradingView well with this analysis for a little bit of a time. If we do get a break of that zone, then I expect potentially a retest, and then where to go to the next potential level. Then I'll be using that information. So all I'm really trying to say, in a long story short, that will be bullish for me, but it needs to clear those angular levels, in my opinion, before I'll get too bullish. But I do expect, like we talked earlier when we started the session, that the dollar index potentially has more downside potential, which would obviously be strong for the euro US dollar and pound US dollar. But knowing that it's actually bumping its head at those areas, it is a very strong resistance levels in my opinion. So a clear above that, and then I think that will sort of be the euro would then let loose towards the next sort of area of angular resistance in this case. Hopefully that makes sense. A little bit
yes,
from what I normally do during these sessions.
Yes,
but I also like looking at
tell me,
geometry.
Tell me, Richard, do you use sometimes the pitchfork, for example, on daily levels? For example, yesterday low, yesterday high. Do you have some experience in that way? Does it help it in trading?
If you're actually just looking at the highs and lows of a previous day, I don't often do that too much. I have in the past. I typically like to focus on the major swing points. And see where price is gravitating towards, and then make note, whether that's mentally or on a different chart, where those levels actually are. So quite often price would gravitate towards them, which could present a trading opportunity, or actually take reversal trades as price moves into those levels, especially if it's taken from a higher time frame. And just to make sure, if you're bullish buyers, yes, make sure you're not taking a position trading right into that level that's 10 pips above you. You know what I mean? Because so it's just, I like to know mentally or actually physically in this situation, where these very, very strong support resistance areas are on higher time frames, if that makes sense.
Yes, yes.
All right, so I think that's all I wanted to show you on there. How are we doing on the time here? Still got, what, 15 minutes, Chetan?
Yes. I'm just watching my British pound dollar right now,
Okay. You can take it over if you want
and
to.
okay, just to tell that the price started to go up. I
Okay.
will just share the screen if you want, if I can.
Yeah, go for it. Go for it.
Okay. So, for example, right now we have the low on the last 15-minute candle. The low was exactly the low that we have in the middle of Euro session. And this is to the pip. Just it's a 1.2705. So we have that low and we
So
started to go
27.
up. If we go up, if we just continue in couple candles to go up, we can reach the level 1.276. And this is something that I see very, very often. We miss few pips. As you can see, the high was 1.27534. We missed to hit the target with 6 pips. We went down to the support, touch the Euro session low to the pip, and we again going up, trying to touch this higher level. So this is the pattern that I see so many times,
Yeah.
and this is really remarkable how that repeats itself and how really we can make some kind of the profit if we really just keep doing all the time.
Yeah.
However, like I said, the only thing that I don't like here, just to check again the indicator relative strength index, how
Mm.
that looks like. I will do that again. If I make the trend line like this, I don't like the how that we
Yeah.
broke this indicator. And
Mm.
this is something that very often will stop me to enter into trade. Even I have a good risk reward ratio because I really like to have a clear bullish trend and all triggers to align. And this is one of the triggers that I want to use, that trend line relative strength index needs to be bullish. And for
So if
example, right now, I afraid to do that, for example.
Yeah.
Yes.
So if the RSI was bouncing from the trend line at that level you were talking about, obviously it's below now, but if it was above, then that's something you would consider
Yes,
taking,
yes.
right? Yeah. Okay.
Yes, yes, but for example, my one of the my rules is one
Yeah.
time if we break this trend line, I cannot trade. It
Yeah.
doesn't mean I should sell, but just avoid trading because
Yeah.
it's not good. So
Yeah.
right now I don't like it, and I see again just in I'm talking 2 minutes. I think I'm talking two
Yeah.
minutes. In two
And it's
minutes,
gone lower.
we already have 10 pips down.
Yeah.
This is incredible. Yes, 10 pips down in just 2 minutes, and we are again going to that support. Maybe we are trying to break this support and again to go to 1.2680 again. So
Yeah.
really, 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 I know that if I'm traded, for example, 10 years ago, I, I think that I would make 3, 4, 5 trades in this 1 hour. So
Yeah.
I'm sure that I will do that.
Yeah. It's moving lower now. Interesting.
Oh, great. I guess Richard and Nicole, do you have anything else to share?
I don't really have anything else. That trade unfortunately did not work out. It went sideways for quite some time. Things are just too weak on the indices. We're just seeing prices moving lower. Obviously, the US market's not liking the sort of, I don't know, political climate or whatever it is. very, very sharp declines. It's something I was saying in the beginning of the year. I did expect that to occur. Um, and now it's playing out. And having to deal with that volatility, you can't say price was not going to go up and you should stay out. I followed the trading rules, didn't work out this time. And next time I'll just repeat those same rules of the strategy and keep going at it because I got confidence in the actual strategy. So unfortunately, nothing too much seriously happened today on my side. But yeah, it was great seeing Igor and how he approaches the markets.
Yes. I guess, Igor, you have something for us?
Yes, I'm just watching. I have one. I cannot say nonsense, but when I track every single major forex pair, all of them against dollar are winning last 48 hours, last week, or
Yeah,
something like that. But when I go to US dollar CAD, we have something really unconventional because as you can see on a daily chart, we have 1, 2, 3, 4, 5, 6, 7, 8 days in a row bullish trend. And
yeah,
even in this moment, when US dollar is so weak, we have so good push for US dollar CAD. So for people that if something switch in the market and if US dollar start to go up, I think that US dollar CAD can be the best asset to use to trade, because if in this moment when the US dollar is so weak, we have this bullish trend. What will happen
mm,
if the US dollar start to strengthen? I think that this can be really, really incredible. And I think that all these things that we see right now on the chart are purely fundamental because of Trump tariffs to the Canada. And I think that because of these tariffs, all these things happens on this chart, which can be really good thing, because if something happens with these tariffs, if for example Trump just change his mind or something like that, I think that we can have one big bearish candle here, just in one day,
yeah.
for example, because it's really, this chart is a really something that I didn't expect, and I by accident I just open it because I do not trade US dollar CAD too often, but right now I'm a little
Mm.
bit surprised. What do you think, Richard? Do you have maybe explanation why this happened with US dollar CAD?
I think you just said what I what I would be thinking there. I don't know. There's so much uncertainties in the markets, and I mean, it's showing in the forex markets. It's showing in the indices. Um, oh, whether it's difficult trading conditions, I wouldn't really say that much. But yeah, just looking at what the euro US dollar did there, hitting that long term upper median line, and the other chart that I've shown you, could just be a temporary little pullback. But I do still share your sentiments that on the bigger picture, whether you're looking at whatever currency pair versus the dollar, I do think the dollar index itself has got some weakness ahead of it. When that's going to happen, it's already happening to a small extent. Is it going to start accelerating? Who knows?
Yes,
Really, really don't
yes,
know.
yes.
Mm.
It's really so much uncertainty, and um, sometimes I think that this intraday traders, I think that can benefit more than this fundamental traders, because we don't have some clear big trends like before,
No, no.
and I think that maybe this is good for the shorter time
Yeah.
frame
Remember
traders
also
right now.
volatility can be pretty good on a shorter time frame or like day trading. But
Yes,
again, number one rule, always look at your risk first and make sure you're controlling that, especially on smaller time frames, whether you're scalping, intraday swing trading, whatever you're doing. Volatility can be good, but yeah, just looking at that chart there on the euro US dollar, up, down, up, down, up, down, up, down. It's all over
Yes,
the place. Yeah.
yes. I just want to ask if somebody watched this, or are there any questions from the traders that watching live? Are there any question related to some maybe setup or something like that?
Mhm.
Well, I don't see any questions yet, but yeah, definitely, we viewers, if you have any questions, please drop your questions in the comments, and we'll try our best to answer it.
I did see some comments come through there. That's the first time I see that, which was pretty cool. But no questions that I've seen. I mean, you are moderating shit.
Yes.
But yeah, from my side, I'll be back on Thursday again, trading the same strategy, and hopefully things work out a little bit better.
Okay. Um, so
Is
we
that
have
Robert
Robert
saying?
here. Yeah. Yes,
What did he
Richard.
say there?
So he has just a kind of he missed divergence and NASDAQ comment. Like he
Oh,
has
so I think Igor was asking if I actually
Yes.
look at divergences. The problem with divergences is, you know, especially in Nasdaq, especially during times like this, we're seeing price moving lower very, very fast, right? So price can start, or the indicators can start diverging, like whether it's just your MACD or your stochastics or whatever it is you want to be looking at for quite some time before you actually do get reversals. So it can be quite dangerous just to be relying on that, although it can be, let's say, an overlay and to help you with your decision making. Um, if you want to, let's say, take a reversal trade or trend continuation trade at the end of a correction, are you in overbought, oversold situations? Do you have momentum divergence, whatever divergences are oscillator that you're following? Yes, it's helping you with your decision making, but in very strong trending conditions, um, divergences just to rely on that solely can be quite dangerous, in my opinion, especially on the indices, because it can keep on diverting, and price is continuously going in one direction. So hopefully that answers his question there.
well, absolutely, that makes sense.
Hmm.
I guess anybody else has any question? It looks like no. So well, Robert has like I guess the divergence are more secondary then.
I wouldn't say secondary. It's like, for me, it's like you have to almost build a case, like an investigator. Should I be taking a trade here? What are other things telling me? Is there stuff that's supporting the idea that I should go long or short? So if you do use stuff like divergences, by all means, nothing wrong with it. Definitely not. It's just knowing that in the back of your head, that during very strong trending conditions, divergences might start showing up, but could be from the point that it started showing up to when we actually get a reversal, can be quite a long period of time in between. So for me, using indicators, it does definitely have a place, but it should potentially just be another layer to help you out in your decision making, rather than potentially just relying solely on what the indicator is telling you.
Well, thank you,
Awesome,
Richard,
Robert.
for answering that.
Yeah.
Igor, anything else? Anything from your end?
just just to thank Richard for all these things that he said, and for his fair value gap strategy. And I learned a lot in this session from him. And just to tell that to recap, that I created a buy trade for the Aussie dollar today, and that I
Yep.
play with British pound dollar between the levels 1.271 to 1.276, and I have a bullish bias from the 1.2680, maybe for some traders want to know that. And this is it. I really enjoy this session.
Yeah, same here, Igor. Very nice meeting you. We're on different hemispheres of the world. Always great when it comes to trading. I
Yes.
sit in a small office here, so I really do enjoy these sessions with questions coming in and meeting other traders as well. So it can be quite lonely being a trader. So yeah, if you got any questions from, guys, newbies here, there's no such thing as a stupid question. I don't pretend to know everything either. But I think this is a really good opportunity to do ask questions, meet like-minded people that enjoy trading, and have a bit of a community going, which is I
Yes.
think very beneficial.
Yes. Yes, it is.
Awesome.
Well, great. Thank you so much, Richard and Igor, for joining this insightful session and for sharing your valuable experience and strategy.
Thank you.
The discussion today has proved, provided a comprehensive view of the latest market trends and potential
Mhm.
trading opportunities and risk management strategies too. So I'm confident that traders will find this insightful, beneficial,
Yep.
and
Hopefully.
navigate market volatility and making informed trading strategies. So thank you so much again for your participation, and I look forward to have like another session like this soon.
Of
Perfect.
course. Of course. Bye
Nice
bye.
meeting you too, Shetan. And Igor, cheers. Have a good one.
Cheers.
All right,
Bye
thank you
bye.
so much, and also viewers, we do have another session in next 20-25 minutes. So please
Okay.
stay tuned.
Perfect.
Thank you both of
From
you.
my
Bye bye.
side, cheers, everyone.
Okay.
Have a good rest of your
Cheers.
day. Bye-bye.
Bye bye.
Hi, Paul. Hi,
Hello.
Michael.
How are you?
Hi, I'm good. How are you?
Hey.
I'm all right. How you doing? Nice to see you again.
Hey, you too,
Same
Paul.
here. Hi, I guess Paul and me, like we already had session earlier, but it's the first time doing a session with Michael.
Oh yeah. Nice to
We had one off the books.
That's true.
Great. Thank you so much, guys, and it's good to have you guys here. So let's go ahead. My name is Chetan, and I'll be your host of the day. Again, just in case you need any assistance, you need anything from me, let me know. I'm just right here. I won't interrupt you guys because I believe you will be indulged in this session. And anything like questions, anything you want to guys, you can can talk in between. You need my assistance, let me know. So we'll
Perfect.
start the session while asking you guys to introduce yourself first, and then we move on from there.
Yeah. So I'm Mike. Everyone knows me. Trade-wise as FX Dinero. I am. This is my 12th year going into trading. Majority of my time I have been not profitable for about 7-8 years, and I kind of just now found my footing about 3 years ago. So I got everything together now. But full-time trader. This is all I do every day, and I'm residing here in Mexico, beautiful place. And in essence, living a dream in paradise, trading, teaching. I'm a trading coach over at WB Trading, where I help other traders develop their plan and kind of guide them in the right direction. Also, I have my own fund on the side as well, where I do some coaching and teaching there too on different strategies. And yeah, just trying to ramp up everything 2025.
That's great.
Same story, except not as experienced. I'm Paul. I was a career teacher, got into crypto during the pandemic. And again, as Mike said, a lot of hard work, doing it for a while. Then it clicked, and I've been doing it full time ever since, as well as helping other students find their footing as well in a challenging market.
For sure.
Well, thank you so much, guys. So yeah, let's dive into the session now, and you guys can start the session.
Mike, do you want to kick off?
Yeah, I actually can. Let me share my screen here. I was actually on yesterday, so I did once. I was on with Sammy, so I just want to kind of read what I'm currently in, which is. So this was pretty decent. I'll walk through quickly. I'll actually start to pull back now, of course. I'll walk through quickly, like what we were looking at. Right, it's actually a custom chart that I had one of my devs create for me, but it actually gives me pretty much a lot of the information that I would need to see to make real decisions. Right. So at the top here, I have my actual chart, and in this chart, I have some EMAs here. And for those of you who don't know, I'm trading the market maker and order flow structure, right? So for me, I'm overall looking for a pattern. We're looking for structure to see where I am first. And then in that structure, I'm looking for a particular pattern. And then if that pattern confirms by giving me confirmation, then I will enter the trade with proper risk management. Right, so that pattern for me looks something like this. This will be like the peak. I'm looking for that break. I'm looking for this retest of the area, break again, retest the area again, and then down to the peak in essence. So peak low. This is what I would call the market maker structure in essence. So I'm looking for, there's two areas I stay away from. I learned a long time ago, I try to stay away from trying to grab the peak, whether it's peak low or peak high. I stay away from it. So this will be peak low, right? And then I got the peak high here as well, right? So these two areas I am not too much interested in. I know a lot of traders are great at finding confirmations for peak areas. I have not been successful with that, so I stay away from it. I am only interested in this area and this area here, right? This for me is what we would call, if it was a certain level, this would be level 1. Level 1, right? And then this area here, whoops, my other triangle. This level here, right, would be in essence level 2. So I'm in essence only trading 2 levels. Trades coming out of level 1, coming out of the peak high, going into level 1, and trades going out of level 1, going into level 2, and of course the same thing in inverting, right? So trades coming out of level 3 or peak low, going into level 1, same thing, coming out of level 1, going into level 2. So this is what I would call my structure. I'm looking for this structure on the chart. And again, with EMAs and a few other things here like the TDI, it kind of guides me of what I'm actually looking at. So just want to preface it with that so you guys can have that understanding. And then for, whoops, it kind of took off my short position here. So I'm in somewhere here, stops above. Yeah, okay, so cool. So for me, I can see right away that first thing I'm looking at is I can see that this 5,200 EMA has crossed. And the next thing I'll be looking for is price to give me a real interaction with this 200 EMA, right? So this for me doesn't count. It's just not really anything there. This for me doesn't count either. It's just like a little touch. Of course, these don't count either because it's even lower than that one, right? What I'm really looking for is this area all in here. This kind of gives me nice interaction with the 200 that I'm pretty much looking for. And let's scoop this up here. So yeah, this gives me that interaction of in essence what I want to see coming off the 200 EMA, right? So I'm looking for some type of real structure here, right? So some move like this and coming on down, right? And then additionally, so at the top I have my chart as I was mentioning, and then at the bottom here, guys, I have what we call a TDI, which is the Traders Dynamic Index. And it's basically a few different EMAs or indicators together in one. The blue lines on the outside, you guys probably heard of this, is what we call the Bollinger Bands. I want to see price contained in this when I decide to take certain setups. The red line or pink looking line is called the signal line. I like to see that cross to the proper side of what direction I'm going in. And then this purple looking line, right, is the RSI line. Same thing on like the RSI indicator. That would be pretty much the same thing. And then two more will be the yellow market baseline, which is a liquid movement of the 50. So it doesn't just stay in one spot. It just kind of moves with the 50 EMA at the top. And then the last thing I have here is this dotted white line is what I call the static 50. And for short, it's called the static. So yeah, so in addition to the chart, I need my chart and my TDI to agree with each other, right? So I know what the structure is. I know where I am in the actual cycle on the chart. And then on the TDI here, I need to see the market baseline, which is again, the yellow one. I want to see it go above this static line and kind of curve on down, right? Kind of how it did here, right? And for me, this is called a reload. I went over this briefly yesterday. For those of you who were here, you might remember this, but this is a reload for me, right? Anytime the market baseline comes above the static or below, depending on what direction you're going, there's traders trapped on the other side of this, right? So all the traders, let's say above this 50 line, there's pending orders going long, right? So what I want to see is the market go up above that to basically activate those pending orders going long. And then I want to see this pattern going short, right? So that's when I would actually enter the trade. So to take all of this off, we entered this. I looked at this. Typically, I look at my trades for the setups on the 1 hour chart. Then I would like to kick it up to the 4 hour chart to see confirmation, right? I want to see that this price is below the 13 EMA, right? Which it is. I'm only kicking it up to the 4-hour chart to confirm that. If price for me is confirmed on the 4-hour chart, right? So in this case, since I'm going short, I need to see price below this red 13 EMA, which it is. So I automatically check that off. I'm good to go on my 4-hour chart. And then I'll drill down to the 15-minute and look for a pattern, right? And that pattern similarly is just what I just showed here, right? So I have my 5,200 cross here. Then I have a nice M pattern, right? Coming up here. And as soon as this comes down and close, I'm in this trade. This is exactly where I took this. In fact, my price is on this setup, my price is, I'm in at 74, right? So wherever 74 is, I accidentally deleted my strings here. So let me put it back at 74. So I am in about right here, right? And I got my TP at the 80-yard low. And for me, stops always have to go above the most recent swing point. So currently out the money slightly here. It's kind of just been sitting since we entered it. So yeah, that's like typical. But even on a TDI, right? Also what I'm looking for, as I mentioned, again, guys, the yellow market baseline going above this static line here and coming back down. So again, for me, this kind of triggered on those long orders. And yeah, we're kind of just waiting for this to play out. Now, I don't hold trades until the next session, no matter what, whether this trade was in, whether it ran up and hit me at stop loss, of course, the trade is closed. But let's say I'm slightly in profit around 3:55 p.m. Eastern time, I'm going to close the trade no matter what, whether it's in profit, slightly at break even, I'm just going to close it. I'm day trading, so I'm entering and exiting trades the same day. I'm not holding any trades over the weekend. I'm not news trading. I'm not holding trades to the next session either. So for me, no matter what, I'd be closing this. Now, let's say this did go down and gave me some profit, right? Like once it gets about here with this blue dotted line, this is yesterday's low. We call it the blue tracer. Once price gets around right here, about halfway, I would go ahead and move my stop loss to break even at this point. And I would take parcels off as well. So typically a quarter, about a quarter of a percent, I will go ahead and take off. So I get to do three things with that approach. I talked about this yesterday too. One, I'm taking the risk off the table. So I no longer have any risk on the table with this particular trade. Two, I'm locking in profits, right? So I do pay myself daily for doing these. And then three, I still have another piece of my position on just in case this continued to ride into profit. So yeah, this is my setup that I'm in right now, that I'm kind of just hanging out, waiting to see what it does. So definitely want to go through that. And cool, before I get into the next one, we'll start at the top how I did yesterday. Do we got any questions or anything on this particular setup?
I think you talked about your stop losses. What's your approach to stop losses? Obviously, it's a very different proposition in crypto, but what's your view on it, and how do you incorporate it into your strategy, I suppose, is the question.
Yeah. That's a great question. So for me, I always put my stop above the last swing point. So around here, right? So this is pretty much the highest point. So I just always put my stop above that point. I always say if they come back and get that, they can have it. They can just have the trade. But for the most part, I always like to put it above the most recent swing. Now, this is a safe point, right? That's the safest stop loss. This is a little bit riskier, right? Because this is a swing point here as well with this wick, but they could easily, come on up here, tag this point, and then come down, and I'm looking crazy. Right? So I always put it above the highest, the most out of the whole structure there, I put it at the highest point. And typically, simultaneously, this would also on my TDI, which again is at the bottom, you can see there's this little outside the band part here. So price is actually outside of the band. This is what I call it created some outside structure. So I always like to put my stop loss like at the outside structure around the highest point. So if you look at the TDI, it's about here, and it kind of just lines right on up with what it looks like on the chart.
Yeah, I mean that's kind of, I mean, it's a different approach in crypto, but it's certainly, we can't, a lot of, obviously it's very traditional to use a percentage decline, and a lot of people will say, I always use 5% or 10%, and it's always a bit of a difficult proposition. So as you said, putting it out of the way where it's obviously not going to allow you to incur significant loss, but you don't want to be stopped out unnecessarily all the time. So putting it at the point kind of where your trade invalidates, I think that makes absolute sense. And it's the same thing we do in crypto. I think we just have to give it a bit more air in crypto because there's a lot more volatility.
Right. Yes, same. And then for me, how you just mentioned about like the percentage basis, as long as this makes sense, which is a minimum for me is 1-to-1. So I always put my stop above the last swing point of my entry is here once it's confirmed. Whatever that distance is on the downside, I need that minimum on the upside as well. So as you can see here, this is a 1-for-1. This is bare minimum. I typically go for 1-for-2, like 1-for-2 trades. But yeah, this is bare minimum for me, at least a 1-for-1. And as long as I got enough space here to get a full 1-for-1, because I'm targeting the ADR low and my stop will be the ADR high. And in this particular example, it's only a 1-for-1, but there's times where, the ADR low or high, your target is 2R, 3R, 4R. But minimum 1 for me, as I mentioned. And then I just always like to put it above the swing because I like to think of it as in this structure that I mentioned. Like obviously the market can do whatever it wants to do, but the probability of it coming all the way back up there, because there's already traders like trapped up here in essence, right? This swing point at the very high, as I'm sure you guys know, they can do this thing where they widen the spread. So even though they didn't necessarily go above this point, the spread probably tagged on a lot of those traders, right? So they got traders trapped here going long, and they snatched it away from them. And I want to put my stop above that point because I don't think, or I'm betting in essence, that they're not going to come and release these traders, right? Yeah. And if they do, as I said, they can have it. I'll lose my quarter, my 0.5%, or my 1% on this.
Yeah, that's cool.
Right. So, well, cool. So that was this one that we're currently in. You see, we're down slightly. We've been in it for a minute here. Yesterday we were looking at crude oil, and we actually smashed this trade yesterday. Where were we? We took this on a 1-hour chart. So yeah, actually, yeah, I took this in front of everyone yesterday. This was a great trade. This one ended up hitting TP. But the one we were looking at to set up yesterday was it US 30? Yeah, it was US 30. So this trade confirmed yesterday. However, the R to R was slightly off, right? And we needed this. And these are situations where sometimes we'll have trades that confirm and the R to R automatically makes sense. But there's other times where you need a pullback for it to make sense, right? So yeah, this is a great example. I'll move this up slightly for us to see this. Now, this is where, all right, I'll take this off then. This is where I would have wanted to enter the trade. This would have given me, 1 for 1.24, right? But I needed it to pull back first. And as you see, it never did, right? Mm-hmm. Because if I would have grabbed it where it confirmed that with the candle closed, I would only be at 0.65. So I'd be risking $1 to make 65 cents. And for me, that's illegal. Like I don't, my setup, my strategy, it doesn't work well with negative R like that. So for me, it always has to be minimum 1. And then if it doesn't, Like, even though this trade worked out great, right? Like, this thing just fell off the map.
It did for sure.
Yeah, I mean, we were looking for that pullback though, right? Like, I have to get that minimum 1 for 1, right? Because it was typically around here. So yesterday we were waiting for that pullback to this area. As you guys saw before I deleted it, I had that alert set, and that's where I would have wanted to enter the trade, because at that point it will make sense. But there's times where it never does, right? Like, everything confirms. In fact, I'll even mark this up how it was yesterday. It gave me everything I was looking for yesterday. It gave me my 50.
You're looking at this from a perspective of tariffs, essentially.
Well, I was looking at this because this is one of my 5 setups, and I call this I'm looking for an M pattern off the 200 EMA in essence. So I got my 5200 cross back here. That tells me I'm short. I have another confirmation, which is the 800-200 crossing, tells me I'm short. So the next thing I'm looking for is some M structure, as I mentioned earlier, off this 200 EMA. And once it closes below the 50 EMA, the 50, I'm all in it, right? My stop to be here. My target would be around here, because that's the low. As long as this is the 1 for 1, I'm fine. But as I mentioned, it never pulled back. And then additionally, as you can see, there's this slight, as I showed on the last chart, outside the band here, right? So I liked it to see outside the band to create that outside structure. The next one to be inside the band. I have that reload, as I was mentioning to you guys. The market baseline went above the static line there, right, for my reload. And this is the main thing I'm looking for. Once this confirms the proper way, I'm all over this trade, like just all over it. And then again, as I mentioned, I'll kick it up to the 4-hour chart. This yesterday would have been a slightly off trade, because as you can see, this 4-hour candle does not give me the 4-hour confirmation. I would have needed this to be below the 13 EMA. Right. So I had everything I was looking for except one confirmation. For me, that's not a pass. It just signifies that I need to take my position a little bit lighter. Right. So instead of me putting on my full 1% or full 0.75 or half, I would typically go around 1/4% or 1/2%, with a no 4-hour confirmation. Right.
Yeah, that's such an important concept to communicate. The fact that we're adjusting, everyone should be adjusting their position size based on what they're seeing. And obviously, and that's a mistake many people make. They'll enter a trade knowing that there's maybe a piece of the puzzle missing. But then go in as if everything's fine. So I think it's an important lesson. But I mean, what's causing this? I mean, what do you feel is causing this bearish pressure at the moment?
Yeah, it's definitely these, as you mentioned, these tariffs. The market is crazy right now. It's all of these tariffs and uncertainty. People don't know what the president's going to do, and they're just kind of waiting around listening. And typically when you get like people scared like this, you get sell-offs, like ridiculous sell-offs. Even Bitcoin, right? Bitcoin just dropped 20,000 in like 1 week, maybe 2, I believe. But definitely the tariffs. I think they actually go into effect today for Canada and for Mexico.
And I think there's a delay in some of the reciprocal tariffs in Canada. So it's a lot of pain coming for sure.
Yeah, excuse me. There's a lot of uncertainty. And typically with that, again, like no one really knows what's going on. So they just kind of, this is the result of all of that.
I mean, obviously you're in a lower range now. I mean, do you have a line in the sand where you're looking at in terms of where you think things are going to stop? I mean, is there an historical line behind here we can see to give us an idea that how bad things are going to get? I mean, or is there much headroom to go down? Yeah,
so there actually is, right? If you're looking at this, I will look at this on the daily chart. This could actually get a little crazy. This could get really, really bad. If I'm scrolling on back here, this can probably, and I was going to say touch around here, there would be 2 points where it is now, which is already bad, but this could get really bad and get to the 800 EMA.
So how would you capitalize on all of this fear?
So I would be on a smaller, so my bias already is short, right, from all of this. And in essence, I would be looking for this same structure, just on a higher time frame, right? So just how I just pointed out, I have this 5,200 cross. Mind you, now we're on the 4-hour chart instead of the 1 hour, the 15-minute, right? So I will be, in this point, I would like to see, seeing it is already below the 800 EMA, I do want to see a slight pullback to this area because I believe there's longs on this side. And I'll be looking for some type of pattern in this particular area, right? Going to this first area. So entry will be somewhere around here. And I'm looking to take profits or partials around this area, whatever this would be. But I wouldn't just randomly jump in this. It would definitely need to be some type of structure, whether it's break and retest, because you can see this just broke this area. So the next area that I would be looking for is this to come back up, touch this area, and then go back down and break the area. I wouldn't be interested in this until a slight pullback. Because right now, for me, it's just really dangerous to just jump in this because it's going short. Especially seeing that it just broke past the 800 EMA. I'm definitely looking forward to pull back and give some type of retest to this area. And then I'll be interested in looking for shorts at this particular point. Yeah,
I'd be looking at bearish retest as well. I think the problem is in these instances that, and this is, I mean, what we were talking about yesterday, it was about the patience, because if we get a quick recovery now and then the price action on the 4-hour, we get a candle straight closing back up into the upper range, then you've got something to talk about. But we have to expect there's going to be that bearish retest, and then you can short it. But for any long trades, we're going to have to wait for a reversal pattern, and that's the frustration.
Yes. I would not touch this long at all. There's nothing for me that's indicating that this is long. Every time frame from the weekly, every time frame from the weekly, this is already ridiculously high, right? And then if I'm pointing out that structure that I'm always referring to, right? Doesn't this look strikingly close to this?
It does.
Right? I'm looking for something like that, right? So I'm short all the way on this. Like, I'm looking for, again, if I were to point this out, for this to come down a little bit, for this to come down a little bit, come back up and retest this area, and then continue down. I'm short here. I'm short here. My stops are up there, and my target would be here, right? But I would not touch this going long right now. The only way that could.
So would you switch to a more, so seeing as how high it is, obviously this is the advice to traders, zoom out, get bigger perspective first. And then obviously, as you've shown me, are you going to maybe not just do a day trade on this? Are you thinking of more a medium term short trade on this, seeing as how high we are? Is that what you're thinking?
So for me, I wouldn't be really interested in holding it too long, because like I mentioned, I'm just day trading it, so I really wouldn't swing it. But as long as it came back to the area that I'm looking for, more or less, then yeah, like I'll hold it. But again, I'm closing it at the end of the day because I don't like to pay swap. The gap ups for me are crazy. I've lost a ridiculous amount of trades. It's part of my process and my strategy to not hold trades to the next session. As a day trader, right?
Yeah, you got to stick to it. Stick to your plan always.
Yeah. Now, obviously, if you're trading on the higher time frames, 4-hour, daily, weekly, obviously, that makes sense to swing it probably. But for me, since I'm trading the intraday moves, I don't hold it at all. I'm gonna get my piece of the move for the day, and that's it. I'm alert, for the next setup the next day if something happens. But But yeah, I personally wouldn't be interested in this until going long, that is, until I see something like this, right? This would have to pull all the way back like this, right? And then I would probably be interested in moves going long. But I wouldn't, this would need to break this entire structure going long.
Yeah,
I would need to
change
see,
the character.
yes. I would need to see price all the way up here for me to even consider long trades, right? And even then, I probably still wouldn't even touch it. I wouldn't touch it until about right there. This area is when I would be interested in longs in this. But anything before that, I'm not interested at all. I'm short on this.
It's really good.
So cool. That's the US 30 that was almost there yesterday. What else we got? Let's see. We still got this. So for me, on mine, as you guys can see here, I look at the first 5 here are just like the indices. So we got the NAS-100, US 30, S&P. And I do look at gold and silver. I do look at crude oil. I do look at Bitcoin. I don't actively trade the peso. I live here in Mexico, so I like to see my exchange rate. So that's why I have that here. And then the rest are Forex pairs that I actively monitor and check out every day. But I went over this yesterday. This is what I mean when I say I'm looking for clear indications. Like I know where I am in my cycle. If the setup happens, it happens. If it doesn't, for me, there's no trade, right? So as you can see, yesterday the same thing happened. We got this 5,200 cross. Then we have this 800, 200 cross. So I got 2 confirmations. I'm short here. My next move would be seeing something like this, right? I want to see some type of, as I mentioned, M structure off the 200 EMA, right? That did not happen yesterday. So this was a pass. I drew the box to show what I was looking for, but if there's no setup for me, there's no trade. And it's just as simple as that.
Yeah.
So I drew this up, and I want to leave it here for the traders today because we did mark it up yesterday. But if you can notice, right, how the first 3 are going to look strikingly close. So NAS-100, US 30, and S&P. Now, if you notice, this one actually gave us the move off the 200 EMA. It just didn't give us the pullback that we were looking for to make the risk to reward make sense, right? So this ended up being a pass, but I'm looking at the same thing is the crazy part, right? The only difference is one confirmed and one didn't. We got the, once again, 5,200 cross, 800, 200 cross, that M structure, right? And the drop. But this one gave us the move off the 200. And this one didn't, right? Yeah. So that's the difference. When I'm looking at these 3, they all kind of run together for the most part. But sometimes one will look better than the other. And this is an exact point. Like, even though these are kind of moving in the same fashion, this one did not give me my 200 pattern confirmation like US 30 did. So I was not interested in that one at all yesterday, right? Same thing with S&P 500. We marked this one up yesterday too to kind of show the move. Now, this one was kind of close, right? But I don't like it when it's just one little touch here. That's not enough for me. I need 2 touches to this price, right? The one touch is just the tester. And I want to see on the second move, I want to see them test that area again and it get rejected, right? Because if it touches the area again and gets rejected, I'm all over it. If it touches this area and breaks through it, of course, it never set up, so I'm not entering it. And then if it never sets up the right way, I'm just not entering it.
Yeah, I mean, it's such good practice, because when traders of any instrument thinks of risk management, when they're new, they think of maybe stop losses, they think of that, but you want to be, you don't want to be in trades where your stop loss is at risk. And people just sometimes when they're new, they want to trade all the time, or they stick with one thing and they just over trade it, and they're trying to find things. So having a selection and doing a lot of work charting and then cherry picking the ones which fits your risk tolerance better is the best risk management. I mean, we don't want it to, the stop loss is just a safety net, really. We don't want you to fall off the rope. So it's really good advice.
Yeah, 100%. And I agree with you. Like, you know, we make jokes up. So for me, I have 5 setups. I went over these yesterday, but I'll go through them again quickly. And I just want to break this down because I tell traders all the time, this is super, super important. Risk management isn't just about a stop loss and, you know, making sure you don't lose a percentage of your account. You still want to be able to understand the probability of your setup playing out and to be able to bet appropriately, right? So for me, again, I have 5 setups. Now, these are just the names I call them, but I just want to clear them out and just to show them. And I'm going to put them in order from highest probability. So I have the master trade, right? Then I have the combo trade, right? Then I have the ID 50 trade. Then I have the M or W off the 200. And this is the one that you guys see here to the left. And then I have my money trade, right? Now, these are all, not only do I have, each one of these have different characteristics. So right now we're looking at S&P 500, and I was looking for a pattern for the M off the 200, right? It could be an M going short, or the same thing can happen inadvertently, and it's a W off the 200 going long. So that's why it's the same thing, in essence, just the other way around. But yeah, in this particular example, we're looking for one of my 4 setups, which is the M1W off the 200. Most traders, they don't even get this far to not only name their setups, but know the characteristics of each setup, right? So each one of these, they are like 5 totally separate people with totally separate personalities, different characteristics, and I have a completely different checklist for each one of these. And on those checklists, each one of them have to match up and actually confirm, right? So that's a deeper level of risk management. But to go even deeper than this, each one of these I even have rated, right? So this is my A setup. This is also an A setup. This is a B, this is a B setup. This is a B setup. And this is a C setup for me, right? Each one of these are bet appropriately, right? So on my A setups, I'm doing my full 1%, right? In fact, here I teach traders at, you know, where I'm teaching at WB Trading or at my own fund, Keller Capital, I teach traders all the time. If you do not put your full 1% or your full position on your A setup, you're doing yourself a disservice, right? You have to, if there was any time to shoot the lights out, it's going to be on your A plus setup, right? So you got to put your full position on. If I see a trader who did not put their full risk on their A plus setup, they're getting reprimanded in essence. Like they get slightly picked on. Okay.
All right, well, let me, if I may just interject, can you tell?
Yeah.
I mean, I understand why you should reprimand them. You know, but why, for people listening, why would you reprimand them?
Because in essence, they are not following their strategy. Like they're not following the plan fully. You're not following the process, right?
And that's when everything falls apart, isn't it? When you don't.
Exactly. So a lot of traders just go in, right? And let's say they don't know how to name their setups, and they see a trade and they just put the full 1% on, or the full whatever they put on, 2% every time, no matter what setup grade it is, they just put the full percent on. And I try to explain to them, I can logically justify why you would do that, but expertise and a deeper level of understanding and professional traders, 6, 7, 8-figure traders, they don't do that. We don't do that. We bet appropriately depending on the grade of the setup, right? So case in point, and I don't mean like fully repping, I don't whip to pull out the bet or anything, but best believe they're getting picked on for the day. Like I'm asking them, like, so why didn't you put your full risk on? And I want them to say, in essence, why they didn't, whether they were scared, whether they wasn't fully confident, whether they had maybe a fight with someone, so they're not mentally there. So we can kind of, peel back the layers of, you're breaking your trading plan by doing this. And overall, in the long-term journey, that's not going to help you out. Like you're doing yourself a disservice. You're behooving your own trading plan by not following the script. It's like supposed to get, once you hit your stop loss area, if you don't have it set manually, which you should, and you're supposed to close the trade and you don't. It's the same thing. You're supposed to put on your full risk and you don't. Right?
And I mean, a plan can be, this is the thing. I mean, I would rather have a new trader have a plan which is not great than not have a plan at all, because you can assess a plan afterwards and think, you know what,
exactly,
I need to adjust this. So over time, your master trade is much better than it was when first conceived, because you've got experience, you see what the market's given you, you see what to avoid in the future, and that's the
yes.
kind of, it's a really difficult mentality, I think, to get on board when you're new to the market,
mm-hmm.
but the most important one for sure.
Yeah, and it's all about refining your trading plan, right? Like you just mentioned, what I'm showing you guys now and the rules and everything, this was something that was developed over time, right? Like, even though I'm profitable, I've been profitable for years now, I'm still day by day, I journal my trades, I tag my setups, I do the work that's involved because this is a sport. People don't really notice it, but this is a high performance sport and you need to perform, at your peak. And to do that, you practice. I use the analogy all the time. Trust me when I tell you, even though Steph Curry is probably the best shooter ever that we've ever seen, that guy still practices every day as though he's not. And if you're inspiring to be a profitable, long-term, successful trader, you need to do the same, right? You just have to do the work. You have to put it in. You got to get the reps in, right? So coming back to it, on just being able to bet appropriately for my B setups, on B setups, I'm putting anything from 0.5%, right, all the way up to 0.75%, right? And then on my C setups, I'm doing anything from 0.25% to 0.50%, right? So I can easily identify what I'm going to risk on this particular setup. I don't have to even worry about it. Like, this is ingrained. I already know. And this is the process that I'm following, right? So when I see my master trade setup, there will never be a time that I don't put my full position on. That just will not happen. If I see a C setup, right, my money trade, I would never put anything over 50% on this setup. I just wouldn't do it, right? And that just, once again, this is another layer, another level of risk management, right? So super important. And I always try to really just drill this in is paramount that, you actually follow some type of plan like this. And it doesn't need to be the way mine is concrete. You can use this as a template. This should plant a seed for how you can kind of, maybe craft and refine your own trading plan. But the moral of the story and the moral of the lesson is to not bet the same size for every trade, right? And you need to be able to also identify what setup you're actually taking. It should have its own characteristics and have its own personality, right? I know each one of my setups as though they're a real person. I know what they look like. I can draw it. I can close my eyes and see it in my sleep. Like, I know every aspect of it.
Well, as long as you're not having nightmares about it, that's fine.
Right. Right.
Which does happen.
So that's the important part. Right. Well, cool. That's I think that's pretty much let me delete all of this and then we can, I guess I'll check this really quick and we can kind of switch off here and see what's going on. Let me go back to this FJ trade really quick. Yeah, see, this is giving us a problem right now. And let's see. Yep, so we're slightly out of this now. We're literally almost halfway at a stop out. So for this, as mentioned, right? As soon as this takes this is automatically on. I don't have to manually close this. Once this takes me out, that's it. I'm done with this trade. I'm on to the next one.
Yeah.
But yeah, we'll just watch this play out, just kind of play around for a bit. This thing might turn back around. It got a little bit of time on it. And yeah, that's pretty much it.
Well, yeah, we definitely need to check back in with that before we finish. What as a yeah, let's do that. As a really cool segue, have you been paying attention to Bitcoin? I know you mentioned that you've been enjoying the multi-coin down. What's your take?
Dude, I'm like, I almost wonder what's happening, right? Like, I almost think, and it sounds funny to say, but I almost think that Trump is somehow getting this to go lower and lower and lower so all his friends can just jump in it.
Well, it's funny you said that, because there is some members of the US Congress are calling for an investigation into the announcement over the weekend of the crypto reserve and who had foreknowledge of it. Now, I'm a bit skeptical because the media tends to ignore just regular price action,
right.
You know, and the pump happened. We'll look at the chart in a second, but so it's a bit crazy, and I would love to throw the book at him for insider trading, and there's many things he's done. I mean, just when he took office, in terms of his own coin, made him so much money, but that's largely, that's small fry compared to everything which is going on. But yeah, so let me do you mind if I switch to a chart? Is that okay?
Yeah, let me stop sharing mine. Stop sharing.
See if I can do this a bit better.
Should be able to. Yeah, you should be able. Good to go there.
All right. Let's try this. Okay.
Yeah, I was just looking at it like over the weekend. It was super low, and boom, this thing just shot up like 10,000. You would hate to be short over the weekend, right?
So can everyone see this? Okay, it's all good.
Yeah, we can see it.
Yes.
Okay, so we had this chart up yesterday, and we had this. We've been traders and sellers have been waiting, of course, for this double top, which is a reversal pattern, to be confirmed, and it was. And yesterday we were sitting with this kind of pump from the news on Sunday, and we obviously had a significant element of capital. It's about a third of $1 trillion come in just 4 hours. But then it's pushed, obviously, the price action up to, as you were talking about, putting in a bearish retest, essentially, of this range. And as I said yesterday, we expect it to come back down, which it has, because, I mean, there's sellers here, there's sellers here. I mean, why wouldn't it? So, and then all the news today is like, well, it's manipulation, but well, it might be, but it's perfect. It happens to coincide with perfectly normal price action. So I'm not quite sure what the argument is. Not that I'm defending anybody. So I suppose the question is, what is going on? Are we going to come down? And if you're a long-term investor for Bitcoin, what's the deal? I mean, are you going to, where do you want to get in? So I've got a few charts for you to look at. Let's just start. So we looked at this one yesterday, and this is a monthly chart, which means, of course, for Bitcoin that carries, or any asset that carries significant weight. Now, we had this bearish divergence, which is a divergence in the trend on an oscillator versus the price action. And you can see the RSI here has started to break down after this trend it's been in for quite a while. So that's a little bit concerning. But obviously, we've got a bit of perfectly normal space to come down, and it's perfectly natural price action. This is the primary trend. So coming down to essentially around 69, 73K and then bouncing is perfectly normal. Those are the previous all-time highs from the bull run in March last year. But there are points of concern, of course, but we're still on the primary trend. Everything's looking good, but we could expect this divergence to play out, and we could expect it coming down to about 73K. And that's the argument for waiting to enter a long-term position on Bitcoin.
Agreed.
And I mean, we looked at this yesterday. This is the weekly chart. And it's, this is the upside we're looking at, but we're trying to find an entrance for everybody. And obviously you can see an obvious entrance point here. So, but very bullish on Bitcoin. Nothing seems to have changed in terms of what we expect, but chaos can delay a bull run or mute a bull run, and this is what we're facing at the moment. So again, Bitcoin 5-day log scale with fibs on. Again, this is where we broke out in November. Coming back down to this level is nothing to panic about at all.
It's super normal.
Yeah, I mean, because if you were looking, Mike, if you were looking to get into this, you would want to wait, because this is the next obvious level, right?
That's exactly where I would get in at, actually. Exactly. Simple break retest. You're already biased long Bitcoin. Everyone thinks it's going to $1 gazillion. That's exactly where I would get in at.
And the thing is, and again, we've got this 300K level up here, which again, the other chart kind of highlights as well, is kind of 300K up here. You see, this is kind of where we're going. But here's the thing. If it doesn't come down and you see it starting to recover, I mean, you can change your strategy. But right now, this is where we think it's going. And if you're looking to invest in Bitcoin, that's the level to be looking at, the range. But we could have a bounce here because things are bullish. This is the 200 MA on the 1 day. You see, we came up, we've come back down. It is a lower low, so that is concerning. But we want to see how it reacts to this level. So you can see the order blocks here as well. This is around 71, which is exactly kind of this area here. So you can see other traders are thinking the same thing. But we need to see what happens. And as you were discussing, Mike, like if this breaks, then obviously short traders, you're looking to enter on the bearish retest, looking for that confirmation, maybe something like that. If you're looking for a short trade of some kind, which I'd be hesitant about promoting. But things can, I mean, as I said, we had 0.3 trillion enter the market in just 4 hours, right? Things can change very quickly. And this might just be the liquidity grab, which Bitcoin's looking for, right? And again, this is a simpler view. It's a bit more cute. It's just, it's doing fine. It's coming down. It's retesting. We could very easily have a move here. So, but obviously, these fib levels, 382, again, this range lines up with the other charts we were just looking at. It lines up here. So lots of reasons to look to enter there. So yeah, here's the buy zone. I mean, and this is kind of early 2024. We had this kind of pattern, and then we broke out again. And then here we are again, just right in this place. So we could very well see a bounce here and maybe again hit the buy zone in a couple of months' time. But the issue with that is Bitcoin is a bit like a machine, and it is a mechanical thing, and it is a de-inflationary asset. And by design, it operates on a clock. And we expect, following the halving, continued gains. So I can't quite see we're still being in this level at the summer 2025, which is where this is July 2025. But you can see that it didn't even come down here, you see. So we've had this touch and we're moving away. So we might see something similar here again, but that's just, again, looking at multiple charts to get kind of the right point where we want to buy in for long trades. And let's have a look. So yeah, and then of course, if you're thinking of altcoins, which we'll look at Ethereum again in a minute, this is what you want to be paying attention to. This is Bitcoin Dominance Weekly. We talked about it yesterday. This has been in an uptrend since the end of 22. And what this means essentially is this is money slowly, rather the proportion of Bitcoin compared to the rest of the whole crypto market, including Ethereum. This is Bitcoin growing in proportion. This is money essentially moving into Bitcoin, and every time it comes down, that's when the altcoins will run. So this move here is in it. So let's have a look. Where's March? So where's October? So yeah, this let's see if I can find it. So this move here was the election, and this is when altcoins really kicked off, and the trend was broken. But obviously, because of uncertainty, we've got all of this upwards pressure again. So we're looking for this. We want this for altcoin movement. The whole market, Solana, ADA, whatever you're looking at, will move once we get this downtrend. And it started here, but then, of course, we've had some issues, and inflation's been a concern. But for traders looking for long positions to hold this market, which is the easiest way to make money in crypto this year, you're looking to you're wanting to see this enter a downtrend. And this is, and then you would take profits down here, but that still hasn't happened yet. And this is 2-hour version. So if you're more of a short-term trader, day trader, this is what you want to be looking at. This is the primary trend line we just looked at in green here on this chart, and hopefully in a different color on this one. So, when we get a break of this white line, and when we get a break of this range, this is improved altcoin trading, and this is what we want to see. And we are kind of now entering a macro downtrend, so we're looking okay, but this is the line in the sand, what you want to look at, not just like Ethereum trying to find a good entrance, what we'll look at in a minute, when it's at support or wherever you're thinking of buying into. You have to pay attention, of course, to what Bitcoin is giving us, because obviously if Bitcoin goes down, it's going to bring the whole market down with it. If Bitcoin ranges, that will give the altcoins a chance to move, because if Bitcoin's boring, so everyone starts putting their money in the altcoins just by default. So you might see Bitcoin dominance start to trend down and break this primary trend again if we have either a strong bullish recovery now into this upper range from Bitcoin, or perhaps we just sit around here quite capably without any more drama. And that might be all we need for things to start taking off, because ultimately it's about distribution of money. It tends to start with Bitcoin. And then when profits are taken, from, like, people will be taking profits on this bearish retest following this run up, right? Because they will wait for bearish confirmation in case it goes higher. So you have a lot of people selling here, and they'll have profits from this run up. So probably a lot of profits. So what are they going to do with it? They'll keep it, they'll buy a boat, but then with the change, they'll want to put it into the top 10 or top 100 cryptos to try and benefit from movements which they haven't made yet, where Bitcoin has. And then the process repeats until the main coins and the really low cap coins, regardless of their use case, then just go to the moon. And this is what we're waiting for. We're looking for the tipping point of the money flow, represented by Bitcoin dominance on this chart. But also, we looked at this yesterday. This is total 3 versus Bitcoin, which means essentially Bitcoin, when total 3 is up here, total 3 is total altcoin market cap minus Ethereum, because Ethereum is quite big. You can see we're right here, right above the 786 fib level from this retrace from the last bull run, essentially. And we've got all this space to go ahead. This is money just flowing into the altcoin. Yeah, I mean, it's crazy, right? It looks crazy. And we're just waiting for it to happen, because you don't want to be sitting here looking like, oh, this is terrible. And then you miss this move, because this is just so much money, just trillions just thrown into the market. And this is what you want to watch, essentially. But if we now go to Ethereum, this is a chart which I didn't show yesterday. And this is obviously the daily chart, which gives us a more long-term perspective. We can even see the previous bull run high. So context again, Bitcoin has broke its previous bull run highs over a year ago, March 2024, right? And the rest of the market hasn't done that, with the exception maybe of Binance Coin, right? This is Ethereum, and it hasn't surpassed the all-time high. And this is March here, 2024. So the altcoins haven't moved yet, and we're expecting a huge breakout. And I mean, Ethereum 10K certainly on the cards, following the percentages you'd expect from the last bull run and historical trends. But we're here, we're in the buy zone right now, right at the bottom of here. And you can see how it bounces, and it's been respected since, well, the pandemic crash, really. So we're expecting this, and this is the range to pay attention to. So if you're looking for a long trade or a long hold for Ethereum, not a bad place to get in at all. I got in here, around here as well, which is a pretty good position. I got in around here before this move. So looking now on the daily chart, which is what we were looking at yesterday, we're at the bottom of this range, which we've been in pretty consistently since the last bull run, other than obviously the bear market, which we stuck here. Now, we don't want to come down here, but what you'll probably see, if there's a bit more market pressure, you'll see just, you see these order blocks. There's traders which are trying to get this liquidity, right? So you could see a few wicks just pop down here before a reversal. And so if you're thinking of entering, coming in at these areas, trying to catch a wick, coming at this level, which is about 1921 USD, that's pretty good, because it's, we're right on the cusp of this bottom range. And so here's a good place. Follow the market, follow the other traders. I mean, I'm not convinced, but we could come down here. We have had a wick, but a really good place to potentially enter, but you need to enter with caution because of this wick. So this would be a good place to start scaling in to a long-term hold. But if you're looking for day trades, and you're looking for to capitalize on short-term moves, let's go through what our options are at the moment. So, oops. Hello.
I just want to say really quick, if you don't mind. I think what you're pointing out is awesome, right? Because I think a lot of traders just know, hey, I'm gonna buy Bitcoin or I'm just gonna buy Ethereum, and like, oh, what the chart look like? What chart?
I'm gonna go to the Bitcoin store
chart?
and get me a Bitcoin.
Yeah, like guys, you don't mean buy it right now. You should look at a chart, see if it's a good area, see if it makes sense, and use that, to justify why you should buy it. So I think where you pointed out on Bitcoin is a great area to get in. Same here with Ethereum, great entry area. Like that's how it should be done, right? Versus just buying it because you heard someone say it, or you seen bets on Wall Street on some Reddit post.
Yeah. I'm a single mom. I create cards, but I also trade a bit. And I'm saying buy Bitcoin now. Listen to me.
Yes.
But not dissing moms. I know some fantastic traders that are even better than me who are moms. So let's go with them. But it's like, well, Paul said buy now. Well, what we are saying is that buying here is a great place to enter with a presumed reversal, but it's also the best place to enter to manage risk.
Yes.
And that's because if we have a breakdown and it continues to come lower, I was saying this yesterday, you're going to have pressure to bring it back up to this line before sellers start shorting it again. It's that bearish retest. So you enter on this line or you enter here, you can control your trade. And for long-term positions, we're not necessarily talking about tight stop losses. We're talking about keeping an eye on the market and then making an educated decision whether you should shift your position or not.
Right.
Because you're trying to capitalize on huge moves which have yet to happen. So definitely, these are the levels to start scaling into, maybe coming in here, and then maybe here. But obviously, if we come down any lower than this, we might have a problem. And because if you see the fixed range volume profile, we're right at the cusp of the range, the extreme node here.
Right.
So but I would expect if Bitcoin stabilizes a little bit, we're still above the 200 MA. This could be a day trade for you, a very short little trade, maybe 3-day trade. You could, that's a move which might happen, right? We have a bounce to come up to this trend line again, and you could either use that as a shorting opportunity, wait for it to come up, and then short. You can see there's other sellers waiting with you, which will give you on the 1 hour chart. Let's just see where they are on the 4 hour.
Absolutely. And Paul, I have one question. Sorry for cutting you down here. As you just talked about the old coins, what are the potential risk and benefits of including smaller tokens like Solana, Cardano in a national crypto reserve? Bitcoin?
I would, small is probably not the word. I think they're definitely not Bitcoin. They are definitely small peasants compared to Bitcoin. But in terms of market cap, they are all considered high caps for sure. And the thing, when you're a trader in crypto market, there's many things which can give you an edge. So for example, if you trade ultra low cap tokens, and we're talking just like a few million market cap, when Bitcoin makes a 5% move, that token will make a 50% move, and you can really benefit from that. But of course, a 5% downwards move from Bitcoin equals 50% downwards move from them. So it's basically, you have to change your strategy based on what you're trading. So obviously Solana and ADA and all of these things are pretty big now following the last bull run. So they'll put in more gains than Bitcoin, but they'll kind of just toe the line and they'll follow Ethereum, and you'll get more percentage gains from them. But it's the Ethereum is a good barometer for the rest of the market. Whatever Ethereum is doing, the others typically will do the same. I mean, let's just have a quick look. Let's just try and have a look at Solana. I'm probably going to be proven wrong now. Because obviously that was one of the ones which was looked at by, I mean, we're in the same boat, same boat. We've got all of this downside. lots of pressure. They kind of move together, and it's kind of the unique thing about the crypto market. But of course, you can see these, as you said, they are smaller because you're getting more significant sell-offs than you do with Ethereum, and you're getting more significant rises, and which is why those are the ones you really want to trade, because you can get these, you can get kind of the percentage movements supercharged the lower cap they are. But obviously, sticking with the higher caps or the mid caps are safer because the volatility can be managed. But Ethereum is not something which I typically trade, but I do pay attention to it because it's a barometer for the rest of the market. And you'll see if Ethereum recovers, Solana and ADA will recover as well, because they're all in the same kind of basket. Does that kind of answer your question?
Yes, thank you so much. And I guess Robert do have the same question, and I think he got the answer.
It's a very complicated proposition, the diversification of long-term portfolios in crypto trading. I mean, just to pause briefly to talk about that, anyone who's trying to invest long-term in crypto, and again, there's a time and a place for it. Obviously, you're not going to hold in a bear market, but to not hold in a bull market is crazy, because that's the easiest money you can make. As long as you enter at the right point, which would have been October 2023, and maybe again in the summer of 2024. But how I will construct my portfolios, I will have a selection of high caps. Say I've got Filecoin as an example. I'll have some mid caps with good use cases, and then I'll have some low caps in the AI space like NUM, Victoria VR, all of them, which of course, and those I'll put, as you were talking about, Mike, with higher risk positions or higher risk trades and setups. It's the same with lower cap tokens. I'll put $2,000, say, in my first opening Ethereum position, but I would never put that much in a low cap because the risk is yeah. So what you do is you rely on the relatively predictable gains that you can get from the top 10 cryptos, Solana, Ethereum, which will 4x, 5x, 10x maybe during a bull run. And you use that to ensure that you get your money back, firstly, from your investments, and you secure basic profits. Whereas the high risk stuff, the lower caps, all you need is much smaller amounts by comparison to the rest of your portfolio. But you allow that if one of them goes, it will turn at $500 right into 100,000 if
crazy
wild card, and be in these high risk assets, which you see about all these crypto millionaires benefit from. But you're not going all in, you're managing it appropriately, and you're making sure that you have a spread across all the different sizes of coins, as Stephen suggested, to ensure that you've got the steady profits. I mean, it sounds silly calling Bitcoin steady profits compared to like other instruments, but steady, predictable profits from the Bitcoin and the top 10 to offset the risk of having smaller amounts in the wild cards, which will buy you that yacht, right? This is the negotiation, and this is what we'll be talking about over the next week, and hopefully we're looking at more coins and tokens tomorrow as well, Bitcoin Cash included. But if you're looking to trade Ethereum now, you have two choices. For the short-term trade, I want to talk to the day traders here and the short-term traders. We're going to have a bounce hopefully here at some point, right? We are in a bearish position, so coming in here maybe, and we can maybe try and capitalize on a move up here, but I wouldn't suggest that because there's more sellers than there are buyers. So if you're going to enter a short-term position, it's going to be a short trade right now. And because we've got these, a lot of resistance overhead, we've got this trend line acting as resistance, we've got moving averages overhead, plus other people have the same idea. If you're looking to short, that would be a great place to come in, right? And then if the market changes, you can just get out here, right? Or watch it to see if it puts in a bearish retest and continues down. It's a manageable short position coming in here on these levels. And you can approach it any way you like, but here's the thing, right? Mike, right? It's not a clear proposition because we're oversold on the 1 hour on the RSI, right? Not great, which is maybe we've got this bounce, but once it gets back up here, we won't be, right? And that's the point. So short trade probably, and for intraday sort of, well, probably 2 or 3 day trade is what you're looking at. But if you're looking for a short-term trade, a long position, not holding, you just want to maybe trade this range. So say maybe you want to buy in around here and sell here, which would, you know, maybe take a few weeks, a few months. That's 100%, 94%, right? Nothing to shake a stick at. So what are you doing, right? Are you going to come in down here without bullish confirmation? No, because obviously opening a long-term hold position is a different proposition in terms of risk than trying to just capitalize on this range. So looking to come in down here on the higher time frames for long-term positions makes sense, right? It's manageable. But if you want to come in for a more short-term, medium-term, long trade, then you want to wait for bullish confirmation, and you need to then see a breakout of this line here, and then that would be a better entrance, simply because the trend has probably given you a higher high at that point. You've then obviously broken out of this pattern, which is another bullish signal, and then you're still at long-term support. But coming in here before the breakout is high risk for a long trade, because there's so much resistance overhead, right? I mean, you got to clear it out the way. So those would be the two potential options for you at the moment. But there's still, I mean, you might think, if you've got this moving average, this is the 4-hour 200 MA. Let's see where let's put the 1 day on here. So I'm just going to add the 1 day on my 4-hour chart. In case you're not familiar how to do that, I'll say that if I can remember. Moving average, simple on TradingView, a lot of customization options. Doesn't seem to, here we go. I think, here we go. So I'm just going to set this to 200. And then we're going to put this on the daily chart, make it yellow. So we've now can see what the higher time frame moving averages are doing. Yeah, so and that's the point of control. Where is it? I can't see it. It's disappeared. It must be below. So let's zoom out again. Let's find it. Let's find it. No, it's not. It hasn't come on. That's a bit strange. Well, that's an epic fail. What's going on there? Waiting for time. 200. That should work. I've no idea why that didn't work. Whatever. But yeah, so you need to be having a look and assessing the risk. And if you are coming in for a range trade here, and we have had the breakout, and you're still seeing all this selling activity, and you've got the moving averages, and you've got the point of control for the fixed range here, then, you know, you've got places to take profits. You know, when it hits this potentially, that's safe. That makes sense. It's solid. But don't just buy here after the breakout, expecting it to go straight up. We could continue down. So adjust your trades as we were discussing in terms of risk and what we're seeing. But remember, if the market changes, these order blocks will disappear and they will probably come in lower. So that's, again, it's a waiting game now. But Ethereum is in a good place for a lot of potential trades right now. You've got some short opportunities because we're in this pattern, and long-term holders have got an excellent entry points down in this area. And long traders, once we get a breakout, you know, you're at the bottom of this range and we've got 100% till the top of it. That's good money. That's easy money. But you're just going to manage your risk. And of course, that means we always go back to the money flow, because when this comes down, I mean, let's see what happened to Ethereum on 22nd of November when we had this move downwards where the money flowed into the altcoin market. Let's just have a look. So just 24th of November. Let's just see. 24th of November. Right, here we are. Yeah, so let's have a look. Ethereum daily. Yeah, so here we go. 24th of November, around here, we had this move up here, right? And see, that's what drove it, right? Bitcoin dominance, the money flow. And then we had a very straightforward kind of 30% coming out of Ethereum. But then, of course, where's the money flow again? Too many charts, Paul. But then, of course, we've since come back up. And that's why everything stagnated, because we had the bearish retest, but we've come back into the pattern again. So this is why Ethereum and the rest of the altcoins are just struggling compared to Bitcoin, because they're high risk assets. And even though everyone knows Bitcoin is a machine and it's going to keep doing its thing, it's the inflationary thing, Ethereum isn't that asset. It doesn't have a de-inflationary model. And the rest of the market, of course, it needs people to have confidence in these high risk assets. And they're the last thing to get love when there's craziness happening in the world.
Yes.
With Canada. I mean, they're nice people. So
I say the same thing. Hey, Mexicans too. I live here. I love these people. They're amazing.
I was 5 years in Venezuela. I mean, I'm like, why are we ragging on South America? I mean, come on.
Yeah.
It's just crazy. But this is obviously, it's the whole thing, buy fear. And we have a bit of fear. We're in a great place and you need to take action. But if you're not certain and you're not, I mean, we're talking about totally different strategies for non kind of, intraday trades, which Mike was discussing at the start. But the principles which, Mike, you were discussing, they're exactly the same we're talking about. Yes. Managing risk, waiting for confirmation. And I mean, scaling in. I mean, it's a key thing where you don't have to come in with 100% of your intended position. I mean, just why do you think you have to do that? Right?
Yeah. So like they don't even notice that they have the option sometimes. Like, quite often I'll enter a trade, even if I have a quarter, or let's say I'm putting 0.5% risk on, I'll break that half into 2 quarters. Right away, I'll put a quarter on just because I don't want to miss the move. And then I still want to, maybe I'll set a pending order for that second position, or I'll set an alert to let me know, hey, once it gets here, I want to take my second position. And, you can kind of manage it and scale it in that way. You don't always have to just throw your whole thing on. That's when you're too antsy, when you just can't wait to click the mouse and you can't wait a second longer.
Yeah. I'm trading today, no matter what. Right. I mean, but the thing is, what people don't seem to realize, and it's, you don't say, right. So here's the thing. So say, for example, I'll just go, scaling in an example would be, say you want to come in 10K on something. You're going to enter here. You hope you get a bounce. Maybe it comes back down. Maybe you enter again. Then it comes up above here. And then you enter again. And then hopefully it goes your way. But if it comes down, you can enter again here, which then offsets any loss because from your higher positions, which means you don't need the price action to come up all the way to the top to break even. It's just in the middle.
Right.
And so you can, and the problem is with crypto, because it is so much more volatile, you have to kind of think outside the box in terms of how you approach everything. And what I mean by that is, say you're listening to this stream now and you're thinking about getting into Ethereum because of what we've just talked about, and it's a really good place. And I'll just go back to this chart again. Look, I mean, it's not just on one time, this is a multi-time frame approach, looking at lots of great entrance point. But here's the thing, you can reposition, right? As long as you enter at the right place. So you enter here, say you're crazy and you enter your full position, right? And then you want it to do this, but it doesn't, and it comes down, right? You'll get the bearish retest. You can see that, and then you can exit and then enter again here with your full position, right? So I have been repositioning a lot of my investments over the last few months since November by simply just, okay, I got in here, but now the price action is in this range. So I'll look to get out, and then I'll look to reposition down here. And that's using the volatility of the crypto market to get lower prices, right? As opposed to holding a downtrend or holding the move to a lower range. And these are such simple things to do. You just have to pay attention. If we get a candle body close below here, which I don't think we've had it yet. No, we haven't. See, the daily is holding quite strong. But if I get a candle body down here and I've come in at this level, then maybe I'm going to look to exit and maybe just wait to come in at a lower position, right? I mean, I call it repositioning, just going to repo my trade. And that's what you can do, be flexible. And scaling in is a great strategy for any instrument, but especially in crypto, because you want to scale in so you can follow the pattern of the market and use it to your advantage, whether it goes in the direction you originally intended or whether it goes in the wrong direction, which allows you opportunities to escape by simply having multiple position sizes in different parts of the market.
Right.
So,
and I want to add to it, really, right? Like, I think what you're saying is golden. Like, it's golden. And this works. This will minimize your risk. This will take some of the headache away. This will take a lot of the emotion away. But one thing to add, to kind of tag on to what you're saying, is it's so important, guys, to not put the full risk on, because if you put the full risk on too early, you can't take advantage of this in the manner that you normally could, right? Because you can't scale in good if you've already exhausted your entire position. There is no scaling in. You're already fully positioned. So that's why it's important to be patient, wait, and break the positions up into several positions so that you can take advantage of an approach like this. It's super important.
I mean, Mike, do you keep money on the side for a rainy day when there's like a market crash?
Exactly. That's exactly
Because that's what I do.
Emergency fund. Yeah, just in case you want to have something set to the side, right?
Yeah, because I mean, I've never right. This is, I used to, when I first started trading, I would be afraid of the black swan events, the big downwards moves. But now, having like a black swan pot where I'm like, you know what? I get excited when there's a black swan event now, because it's an opportunity to get super low prices. And usually in the crypto market, the bounce from a black swan event is so huge. You can make like 50% in like a few hours, right? You see a market crash, you look like, where do you think it's going to go with TA? You look 2 or 3 levels down, and you're like, right, I'm just going to put a buy order here. And if I get a wick, I've made profit. And I mean, it's Wild West, right? It's the gunslinger of kind of trading, but it is absolutely how you trade this market. For sure. And it's how you survive. And there's a place for stop losses.
That's the Buffett approach. He doubles down on those black swan events. Like,
exactly. When everyone else is crying, I'm laughing, right? And I think, just to finish, I want to show everyone this chart, which I didn't show them yesterday. And this is a Bitcoin US dollar daily chart, which has got golden Fibonacci pairings paired with the 2-week stock RSI. Now, the stock RSI, very similar to the traditional relative strength index. It just bases its data off the RSI, and it gives you more opportunities to trade. Now, this obviously is 2 weeks, so this is very long movements over extended periods of time. But these 2 fib lines here represent previous cycle tops. Okay, so this was the cycle top from 11th of December 2017, when everyone was first started paying attention to crypto, when it first hit kind of 20K. And then obviously the pandemic, this was the pandemic crash here. And you see, obviously, on both instances, the stock is oversold quite clearly when it hits this top line, this top fib line. And now the last cycle was muted because of the economic headwinds, and we didn't quite reach it. But historically, we always do hit it. So you want to look at, an alternative to this chart, which we were looking at the start, in terms of where are we going with Bitcoin, 320K, 250K. This is another chart which can help us ascertain, is the bull run over? Well, let's have a look. We haven't hit the red line, nowhere close. And the stock RSI isn't anywhere close to being oversold on the weekly. So there is so much more upside. And again, what does this coincide with? 250, 300K, right? So this is what we're paying attention to. And once the market takes off, and if the investors we're supporting and the traders we're supporting get some good entries, which there's a good few opportunities at the moment with Bitcoin, it's like they need to know when to get out. And these signs, these kind of long scale charts with a variety of different methodologies behind them, can give us an opportunity to say, right, well, that is giving us a historical signal. This chart is giving us a historical signal in terms of, where to get out. This one has reached the 2 fib level, which is again the same range, which is the cup and handle measured move. And this is how we equate it. It's not a guessing. It's not like I wake up and think, yeah, I'm getting out. I will wait. So we're looking for good entrances, but then after we've got them, and if the market does take off, then these are the levels to watch. And so if you're sitting there thinking, is Bitcoin done? I don't think so. Based on these ideas. So that's not me for today.
Not by a long shot. I totally agree. Now, even as you talk about as you mentioned, the halvings and you know, once everyone actually gets on board with it, I mean, this thing can, I don't know about $1 trillion, you know, but it'll be pretty high. So
yeah, I mean, the thing is, I mean, what's your view on the impact of all this institutional wealth this cycle coming into Bitcoin? I mean, how do you think, from your perspective, it's going to affect this bull run? I mean, is it going to be supercharged, or is it not going to happen?
No, I think it's going to be supercharged. You got way too many big banks, private companies jumping on board with this, right? There's Bitcoin machines popping up in places everywhere. Like, it's almost like if you're not paying attention, you don't see it, right? But if you have even a glimpse of a clue, there's countless signs everywhere. And especially, again, when you have big companies saying, hey, I'm going to devote I'm buying X amount of Bitcoin per month until it's gone. Like, are you serious? Like, that's a strong indication that this thing is far from over, guys. One thing we all know, we've seen all the movies. The big guys are not going to be left holding the bag, right? They're just not. And this is an indication of that as well. They know what they're doing. They know something that you probably don't. And we just want to keep our eyes peeled for something like this, right?
Yeah. I mean, I think volatility, it will increase, which sounds counterintuitive because obviously the bigger Bitcoin gets.
Right.
I mean, but I think you're going to have ETF funds. They're going to have a line in the sand, not like the charts we just shown you. They're just going to say, well, I said I'm going to take it at 170K. So that's what I'm doing for my clients.
Mm-hmm.
And that will pull the market down prematurely, making it a frightful roller coaster for people who are long-term investors. So it is a case of kind of hold on for dear life, literally.
Right.
It's just the problem is, though, we're dealing with things which are happening, which shouldn't be happening. And like inflation, and it's not all about the United States. Bitcoin is a global commodity, but USDT and Tether, of course, are fundamentally tied to the dollar, which are fundamentally tied to the crypto market. And it all has an impact. And why we should be worrying about inflation now because of trade wars with Canada, I'm just struggling to understand. And I think it's going to be a very interesting year with trading, and I think it's going to be quite revolutionary because there's a thing in crypto where and Bitcoin loves to do this. Bitcoin tends to follow its own rules. Once you see a pattern, right, and I'm talking about these 4-year historical trends, right, with Bitcoin. Once a pattern has been established and clearly identified by more people, it tends to not happen, which is now I'm not making some prediction. I'm just saying I think we're going to be in for a bit of a wild ride.
Right.
And my advice to investors at this point, there's a few questions about crypto, which I'll just answer before we finish. I think just have a plan, as we discussed, Mike, as you pushed at the start. Have a plan and stick to it until it invalidates.
Right.
So you're not, if you get a pullback in the next 6 months from Bitcoin as it touches 200K and you're thinking of exiting, well, firstly, taking profits, you always win. So I'm not suggesting not to do that, but you can scale out as well.
Right.
Yeah. So, have a plan. Don't just exit prematurely, and certainly don't exit on a crash, because you're going to have a recovery, you're going to have a rebound, and it goes back to the basics of market cycle. But just before we finish, I think, and then Mike, definitely you can have the last word because you've put a lot of effort in today, I think more than I have. I've never really looked into the altcoin trends, but know it's a thing. So altcoins pump usually during Bitcoin correction. So I'll get into this probably later in the week. There is 4 scenarios and only one for the money flow and Bitcoin movement, which help altcoins, right? Not all are bad, but the only scenario which makes altcoins really go to the moon is when Bitcoin is going up or in a bullish posture. They're not quite one of the same thing. And Bitcoin dominance, which we looked at earlier, the proportion of the Bitcoin versus the rest of the market is going down. So Bitcoin up, Bitcoin dominance down. That altcoins will just explode, and they always do when that happens. The worst case scenario is Bitcoin going down and Bitcoin dominance going up. And that is what happened at the start of February when we had that crash, which wiped off, like, it was the biggest liquidation in history of the market, right? Not because Bitcoin came down, it came down less than it did the other day, but the market, because of the money flow, just got completely wrecked. So if you see Bitcoin ranging though, and it's not doing much, as long as Bitcoin dominance is going down, then you will have some good trading. It won't be like go to the moon, but it will be like you're going to have upwards movement. You'll have trends changing from a downtrend to an uptrend, and you start having a recovery. And that is the key. Don't just think like, oh, I'm going to trade Doge because I like Elon and Doge is great, so I'm going to trade it. And you do all your charting, and you do it, and you've got your plan, and you look at Dogecoin, you think, right, this is good. I'm at this level. I've got my fibs. I've got confluence. But you don't pay attention to Bitcoin, you're going to get wrecked.
Yeah.
Full stop.
Yeah.
So that's me for today. You want to have the last word? Anybody?
I think that was great. I just want to add on, put on your financial seatbelt. It's going to be a wild ride, right? Yeah.
For sure. Double seatbelt, racing seats.
For sure. The bucket seats, yes. Sweet. Well, great session. I really enjoyed it. I love doing these.
Yeah, absolutely. It's good to see you again. Chetan, anything to ask before we finish? Thanks so much for hosting.
Well, thank you so much, guys, for joining this insightful session. And I really enjoyed today because, to be honest with you, these sessions, these days we are having having 2 or 3 coaches, and, they're having the conversation, sharing their insightful, strategies, something like good news. So it makes me, if I talk about me, I really enjoyed it. I learned so much of new things, and I'll definitely try to amplify in my trading time. So yeah, that's it from my end.
Awesome.
So thank you so much, guys, for giving me your precious time. And I'm confident that traders will find this insightful, beneficial, and navigating market volatility and making informed trading decisions.
Absolutely. And thanks. I see in the comments, last name Pico. I don't want to butcher your name, but yeah, appreciate it. We enjoy doing this for you guys, and we look forward to doing more.
Yeah, 100%. Thank you so much, everyone. Great to see you again, Mike. Thank you.
You too, Paul. I'll see you later this week, I'm sure.
See you later. Take care.
All right. Thank you so much, guys, and stay tuned. We do have another session in next couple of minutes. We have coaches Sam and Howard. So stay tuned. We'll see you back. Thank you.
Hello, everybody. We are back live again. Hope everyone is having a great day. I'm joined by Howard, another trading coach here. Howard, how are you doing? Can you hear me?
I can hear you all well. How is everybody?
Awesome, awesome. Very good. I'm just checking out the comments. We don't have any comments as of yet. Howard, we got an hour and a half session here. I'm actually in a trade right now, so I might as well share my screen really quickly because I need to. I'm a scalper, so I need to be very quick with. I can see it starting to move slowly.
Do what you got to do.
Everyone can see my screen. Any second now. Okay, can everyone? Yep, it's up there. I hate to start the session right away like that, but literally a few minutes, maybe 10 minutes ago, I saw a trade opportunity. I know we weren't live at the moment, but I pulled the trigger on it. So I'm going to quickly explain what I'm seeing, or what I saw even. So we had a very, very bearish day on the S&P 500. I know my charts are looking very messy right now, but this is what happens when you're actually trading. You do end up drawing lots of things during your analysis part. But yeah, we had a very bearish move down, as you see. It's actually extremely heavy selling going on, especially on the orders. Really heavy selling, and we've had this kind of retracement. Now, I entered because if I go back on the footprint chart, there's the 5-minute footprint. Okay, we can see these heavy sellers right here. 1,000 contracts sold, 900 contracts sold, 1,000 contracts, 800 contracts. We're talking huge amounts, right, of selling, which pushed the market down quite heavily. Now, eventually these sellers took their profit. They got out the market, released some pressure. Buyers started stepping in. It started pushing up. And as it got back into this area, I wanted to see buyers getting a bit confident and getting trapped, okay? And we started seeing heavy buying occur, 2.15K contracts here, for example. We saw another 999, might as well say 1,000, another 1,000 there. Lots of heavy buying, but as it started pushing against these buyers, okay, what I'm looking for is who is nervous in the market, who's got a lot of skin in the game, right? Who has got a lot of money on the line and is getting very nervous if it's not going their way. And that was these buyers in this moment, right? Pushed up a little bit for them, but as it started moving back, I wanted to see those buyers dropping out their position, not necessarily getting stopped out, but kind of getting nervous and looking at getting out of their position. And we started seeing heavier numbers appearing, like 1.7K for the sellers. These are a lot of buyers exiting. Now, we're in a very crucial area. I'm sorry, but I have to do this so quick because I really got to keep my eye on it. And we're on a crucial area here where I drew these black lines because we had a lot of heavy buying at some point around this area. And there's a good chance these buyers are going to start defending their positions as it gets in here. So that's why I had it drawn out. You can see the market's dipped into it. And I'm really going to keep an eye. Is this trade? I never allow my stops to get hit. My stops are there for only worst case scenario, right? If something goes absolutely terribly wrong, then my stops are, going to get hit. But otherwise, I'm making decisions on the fly. And I'm looking at the orders. I really don't like that there was 1,000 buy orders right there. Okay, as I was explaining all this. That is not looking too good in my favor. However, I want to see if any of these sellers, especially these 1.7 here, 500 there as well, this area, I want to see if they can defend it. If they can defend it and the sellers absorb this buy pressure, we're going to be okay. And if we can break through this area, we're also most likely going to keep dropping down to this blue box area here. We've got, again, heavy buyers in that area. That will be the next battle zone, so to speak, right? And depending on what happens as we get into that area, I will have to base my decision. But I'm going to keep my eye on this trade. It's not looking too good, if I'm honest. I really don't like this 1.1k extra buy contracts being executed there. I really don't like that, especially in an area where I know buyers are going to be looking to defend. So my stops are very far away. They're actually, I can bring the stop down quite a bit now. But my stops, like I said, they're there just as a safeguard. Okay, 99% of the time I am manually exiting my position. I'm not allowing my stops to get hit. You can see more buyers are entering. They're really trying to push the market up, but they are struggling. The sellers are absorbing that buy pressure, which is giving me a bit of hope, but we're still not out of muddy waters as of yet. Anything can still happen. And I am just keeping an eye. You can see these buyers, they're coming in very strong. Look at those numbers going up. But they're also dropping in this area here. That's these sellers defending their position, okay, adding more positions on as buyers are having this battle between buyers and sellers right now. It's a very, it's not a nice battle. I don't like heavy battles because, well, anything can happen in a battle. You have to keep your eye on it. You have to, as part of being a scalper, you have to be very quick with your decisions. Okay, you can't just walk away from the chart for a few minutes and because you might miss something crucial. And the idea is we're looking for extremes. We're not just looking for small numbers, right? If I see small numbers, doesn't really matter. I'm looking for the extreme numbers and certain areas where I know there was heavy buying or heavy selling. When it gets into those areas, what is actually going on? What is going right now with price? You can see the buyers are still trying to push it up, 900 something contracts, but the sellers are dropping it down, back down to 800. There's absorption happening. But should we break above this area, I am exiting this trade at a small loss, or maybe break it. That'll be a tiny loss. But you know, that's essentially my exit above this yellow box here. Really, we're just going to have to look at what happens in the next few minutes. I wish I had a bit more time to have explained the trade. I could probably explain it once we're out, but as of yet, I kind of don't want to keep my eye off it because we're in a very critical area, as I mentioned. Yeah. So I do apologize, Howard, for just storming straight in. I didn't mean it to be like that.
Very interesting stuff. I guess the first question I would pose would be, would you consider reversing to long?
Not as of yet. I know that this area where the buyers ran out of steam, I know that's a heavy selling area. So we're really trapped very close together between heavy buyers and heavy sellers. Now, I don't like what I just saw there. 1.4K on the buys are getting very strong, as you can see. 700. It is not looking good in our favor. So at this point, I would have to, unfortunately, exit. Okay. And that would be, sadly, a trade that didn't work out. But you see how quick it started moving as soon as it started getting big, the numbers. So you have to be very quick. I actually reacted a bit slow there. I spotted it a bit too late. But that doesn't mean right away that, okay, look, there's no more opportunity. What it does mean is that it just wasn't the right time as of yet. There's a good chance we can go back into these highs here and the sellers will come in again. And if they do, and if I do see buyers getting trapped, we're seeing heavy buyers coming in again, 1,000 contracts, right? Okay, heavy buying going on. And that's sounds like a bad thing for sellers, but sometimes the opposite. If people are putting a lot of money in the game, they are vulnerable, okay? And other institutions out there can spot that. And if they know you're vulnerable and you put a lot of money in the game, they may take advantage of that, okay? So a lot of big institutions like to hide their orders by it's called iceberg orders, right? They break them up into small orders and do many of them. Okay, others are a bit more blatant and, you know, essentially show their cards, which can leave them vulnerable. All right, and you can see very heavy buying. This is could be an area of interest. 1K, another K there. So I can now get rid of that box. I really should get used to actually deleting a lot of these boxes because it gets a bit too messy sometimes for the eye to see. So I might just clear up the charts ever so slightly. I can get rid of this area here. We know that's not good. But I think the buyers, unfortunately, on my case, they did take that one. It is what it is. Sometimes it doesn't work out, but you can be patient, wait for the next opportunity. And it looks like the sellers have pretty much given up trying to fight the buyers on this one. So you could have gone long, but there was no guarantee that the sellers weren't going to come in even stronger, right? I tend not to follow just the highest volume, because if you just follow the highest volume, you're leaving yourself potentially open for traps. And the amount of times you will see huge orders being placed, but it's not going in their favor, it's quite scary if you're in that situation. So I really only look, I could have taken my profit in this area here, where I knew that there's going to be a lot of pushback from the buyers. But what I forgot to mention is that there is risk management baked in here. So I only opened a quarter of my overall risk. All right. So when a trade is working in my favor, it's looking good, I will add on another quarter and another quarter and another quarter. Okay. So if we broke below this area, I would have added another quarter. If we broke below here, would have added another quarter, and I would have rode it down as the sellers just plow through. That didn't happen, so we had a small loss. But again, it's about managing your risk. I would not allow my stops to get hit. My stops were above here. I definitely didn't want them to get hit. So I'm making decisions as soon as I know it's not gonna. Most likely, I'm gonna get stopped out. I might as well get out now at a smaller loss than have a bigger loss, right? I think that makes logical sense for the most part. But yeah, that is it. That is it of now. Let me just see if there's any other area of interest. So my next area is really up here. I'm going to set an alert. When we get to this area here, I will be interested in, again, potentially shorting the market if buyers get trapped, if I see the right setup. But as of now, that is all there is. So I can relax a bit, sit back. I can now, where is the stream? Oh, here we go. Okay, cool. All right. Howard, sorry about that. That was very very quick and rushed. I didn't mean to jump
live always comes first.
Yeah. I didn't even introduce you properly, but if you want to introduce yourself to the viewers, please, absolutely.
Not a
please,
not a problem.
Ahead.
Yeah. So basically, yeah, I've been doing analysis trading for well over 30 years. I got my chartered market technician back in 2004. So I'm a bit of an old dog, although I try to learn new tricks from time to time, and this is one of them. Yeah, so I've been in the markets for quite a long period. In the 90s, I got into algorithmic trading. I taught myself TradeStation, Easy Language, Omega Research, it was called back in the day. So I've got I use a combination of kind of algorithmic rule-based stuff for trading entries and exits, but I use Elliott Wave as a kind of a longer term to give me my bigger picture ideas. So I'll come in with a big kind of long-term Elliott view, and I'll be looking to home in on and using kind of more systematic rule-based mechanical entries and exits. So yeah, over that period, I've done a lot of analysis. I've had roles for private research companies, for I worked for a family office in London many years ago. That was my first kind of trading proprietary trading job. I've headed up research teams in banks and brokers and things like that. So I've done quite a lot of different things related to either analysis or trading over the years. So I've got a fair idea of what I think works, although it doesn't always work. So I think that's the case with just about any methodology or system or whatever it is you do. You're going to get times when it's not going to go your way. And I think trading is probably one of the hardest kind of ways to make money, in that you get a lot of negative feedback from what you're doing. Most other professions and things that you do to make money, there's a way to do it and you get paid, whereas in trading you may do the right things and not get paid for some time. And so it's an interesting way to go. But I think if you can take that on board, if you're kind of realistic about the whole thing, and it's going to go in waves. You're going to get waves of profitability where you can do no wrong, and sometimes you're going to come in and you're going to take loss after loss after loss and think what I'm doing is the wrong approach. But eventually it swings around if you're doing the right thing. So that's my opening gambit anyway. So.
No, I absolutely agree with everything you said. The thing about trading, you're absolutely right. It is probably one of the more difficult professions, but it's not impossible. And that's another thing that people need to understand. It is difficult, but anything worth having, I think, or worth doing should be harder to obtain, right? If it's really easy to obtain, then where's the value in it, so to speak, right? But it's I think 90% is mindset. Okay, you need to be, there's no such thing as being 100% correct. It's just impossible.
Great.
And if it is possible, they're hiding it from us. And look, you only need, even if you have a 5% edge in the market, you can be profitable as long as you're strict with yourself. Okay, risk management is everything in trading. It is probably, I've seen traders who have a really good week or 2 weeks, win after win after win, and they blow all their profits in one trade. And that might sound ridiculous, and people say, oh, come on, how unlikely is that? It's very likely. It happens a lot. It happens very, very often. And the reason it happens is down to risk management. You've got to be able to let go of your losses. Recognize when it's not working out and just let go. It's not the end of the world.
Yeah, and size matters.
Yeah, absolutely. Size matters in trading. Don't over leverage. Trade what you can afford. Don't look at the dollar amount. I know sometimes the thought process can be, oh, if only I put in a bigger lot size, I would have had X amount of dollars. I get it, but it just takes one loss. Do you know what I mean? And you will be wishing, if only I put a smaller lot size, it wouldn't be so bad, right? So percentages, that's number one, percentages. Always calculate your account based on percentages, not the dollar amount. If you're chasing a dollar amount, very, very difficult, because you're essentially letting go of a lot of risk management. And without risk management, I truly don't believe anyone can be profitable. That's my 2 cents on it.
Totally agree.
Yeah.
And you mentioned about having an edge and controlling the the amounts. If you think about the average casino and spinning the roulette wheel, they only cash in when it goes green on zero. And that's not a big edge, but it's big enough for them to build all those lovely casinos and hotels and things.
Absolutely. I think the average casino game has 1 or 2% edge against a player, but with enough games, it adds up. Really understand the power of even small wins can add up if you're consistent. Okay, look at it as a long-term thing. Think years down the line. Don't think about tomorrow. Years down the line, think about what you could have if you play it consistently, right? Play it step by step. Never go over, never trade amounts you're not willing to lose. That's number one, because I don't think anyone can control their emotions if the money is necessary for survival, so to speak. Very hard to control your emotions if you're trading with money you just can't afford to lose. I've never seen someone be able to hold their cool in that situation. So always trade with what you are willing to lose. Number one, what you can afford would be even a better way to say, and be realistic. Look, I know if you have a $500 account and you make, I don't know, 10% in a month or so, I get it. It's only $50, right? It's not going to change. You're not going to become rich. You're not going to, live a luxury lifestyle. But it's a start. If you can do that 6 months in a row, okay, now you're onto something. Do you know what I mean? You're actually onto something, because then you can slowly start putting a bit more in, or do a prop firm. That's why a prop firm is can be very beneficial, because you're trading with capital that you wouldn't have access to, and you're forced to keep into the risk management side, right? You can't be, you can't be in too much drawdown. You have certain rules and restrictions that will force you to be disciplined. So very important. Discipline is so huge in trading. But yeah, Howard, if you would like to, share your screen, if there's anything you want to show, absolutely, please feel free. There's nothing happening on my end. So.
No, no worries. Just watching for that S&P to break down a bit, and maybe have another crack at it. Huh?
Yeah, potentially there is actually an opportunity to buy. It's not my usual setup, but we're seeing, heavy buyers came in here. More heavy buyers came down here, and here. If it dips into these areas and more heavy buying comes in, there is an opportunity to definitely long the market. Like so, and then, maybe target these areas up here.
Push higher.
But it's not my usual position. Normally I have a strict rule. If it didn't work out my trade, I come back tomorrow. I don't try to overtrade. I don't try to win back the losses. It just leads you in a bad cycle, because
chasing.
Yeah, you're chasing it. And if I have a good day and I win, I don't trade again trying to win again. So both sides have to be equal, right? If you have a bad trade, leave it, come back tomorrow. Just didn't work out. It's not the end of the world. If you have a good day, great, leave it, come back tomorrow. Do you know what I mean? If you're only over trading when you have bad days, you're going to keep having more losses on one single day. And you got to have balance. You got to treat both sides equal, right? And it's not the end of the world, because it was only a quarter of a position. So on a good day, I'd have 4 times the amount, and the actual win would generally be, bigger. So it's a minute dip in your general equity curve. Do you see what I mean? But it is quite interesting that it's dipping in. I'm not going to enter another trade because, like I said, I've got to be disciplined. But if I see buyers defending this area, that's absolutely a chance to potentially buy the market. But it really depends. I'm seeing some buyers, the numbers are dropping quite heavily here from 600, but the sellers are pushing it down a bit. A bit of a battle going on. What I ideally would love to see is more of a trap. No one has really been majorly trapped other than these buyers up here. This is actually a perfect example of the trap that I'm talking about. Notice these 1.2 thousand extra contracts on the buy side, another 700, lots of volume up there right at the tip. And the moment it started going against them, we saw this 1.71k on the sell side. Now that isn't new sellers jumping in. That's these buyers exiting, right? Because when a buyer exits, it prints as a sell. And when a seller exits, it prints as a buy. So you have to kind of figure out who is who in the market at any point. And you can do that by just understanding market dynamics, right? That's definitely, that 1.7k wasn't new sellers. That was either these buyers getting out at break even, right? or these buyers here exiting at a small loss because the market pushed against them very quick. And generally, you can take advantage of that, right? When that happens, that's like a trap setup. I like to usually then go against the buyers, but it has to be within context, right? We're in an area where I know it's very choppy. There's too much volume in the market today. It's actually a very heavy volume market today. Normally, you don't really see over 1K that common. You might see it once every 20 minutes. You might see 1K on a price level. But today we've seen 2K. That's extremely rare. We saw 1K, 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 all grouped in small areas. There was a lot of volume going on today. I'm not entirely sure why, because it's actually a slow news day. There's no major high impact news. There's nothing really out of the ordinary, but we had a lot of volume in the S&P 500. I mean, we can probably just compare it. If I just go to like the hourly chart, you can probably see today, in the last 2 days, actually, we've had huge pushes down. Whereas an average day on S&P 500, you're looking at, from top to bottom, 374 points, right? On an average day. Today we did, that's the high. We did almost 600. So we almost doubled in volume to an average day. Now, why that is, I can't honestly tell you. I can't honestly tell you why the S&P 500 today is such heavy volume.
I'm gonna hazard a guess and say tariff related. That's the only thing that stands out to me.
It will be a ultimately fundamentals that would have driven that volume. But yeah, I mean, if you know that it's a high volume day, always be extra cautious. High volume does mean a lot of volatility. And if it's very volatile, trades don't always work out in your favor. And it can happen very quick. That's the scary part. You saw how quick. Once it printed that I think it was here, the 1.1K or 1.4K, I can't remember which one. But my trade was around here. The moment it printed that, boom, 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 it shot up. It was very quick. So you have to be on the ball, especially if you're scalping. If you're a swing trader, okay, you can, you obviously don't have to stare at the charts because you're looking more long term. Fair enough. But if you're scalping order flow, you have to be extremely quick and just ready to pull the trigger. All right, don't hesitate. If you hesitate, it can work against you. But I will stop talking for a bit now. We have some comments coming in as well. Robert says, I'll just go over the comments and then Howard, if I'll bring up your screen and you can take it from there. Robert says, that's why I decided to trade prop firms. I used to do well trading, but then I don't know what happened. I felt like it was a good way to put myself in a bubble of rules that I have to follow. Absolutely. Totally agree. He carries on saying, if I failed the challenge, I would have lost that same amount the challenge cost or more anyway. The plus side is if I pass, then I can potentially make more money than I could have on my account. Absolutely. I mean, prop firms are beneficial, but you have to treat them correctly, of course. Really respect the rules of it. And if you're really strict with your risk management and you have a somewhat decent strategy, you don't even need that much of an edge. You don't need a strategy with a really high win rate or anything like that. Even if you have a small edge and your risk management's in place, you can actually make a lot of money, especially utilizing the capital of a prop firm. So it all comes down to risk management, essentially, if you want to put it that way. But yeah, totally agree, Robert. Very good comment. Very good comment. All right, Howard, I'm going to let you have your time.
Here we go. Okay, let's see if we can share. Let me see window, and we will find share. Okay, good. Okay, can you see my screen?
I can.
Perfect. Okay. So obviously I was going to talk about euro dollar and dollar yen. What I wanted to do just just to give a little bit of historical backdrop as to why I'm extremely bearish on the US dollar, because that really has been kind of influencing my trading of late, looking for the turn and starting to see the turn in the dollar going lower. So first thing being first, let's if we talk about euro dollar now, I don't know how many people are into Elliott wave as a methodology. It's not for everybody. It can kind of be a little bit subjective, and sometimes it can give you some really good ideas, and sometimes it can be confusing as anything. But sometimes when things align and the picture, the patterns are really clear, then that can really give you kind of confidence in what you're doing. So my backdrop, this is a euro dollar monthly chart. So I know you're focusing on really short-term S&P 5-minute charts, etc. But I just wanted to start off just quickly on the longer term stuff, just to give people an idea as to why I'm as bearish as I am on the US dollar. So I think what happened with euro dollar is we made a major low back in September 22, below parity, 95.39 on this chart, 35 on this chart. We saw quite a strong rebound from that low, which topped out at 112.75, and then a sideways move, which I would say based out a couple of months ago. So if we're looking at the Elliott wave picture, I'm assuming that people are familiar with the 5-wave sequence, where an impulse wave in the direction of the trend unfolds in 5 waves in the direction of the trend. So what we have, I believe, so far from the low in 22 is wave 1 up, and I think we've completed wave 2 down a couple of months ago. So that tells me that we're about to blast higher in wave 3. Okay. Now wave 3 in Elliott terms is usually the strongest and the longest of the impulse waves within a 5-wave sequence. So we should be looking for a move above the high of wave 1, which is the recovery high so far. So it's all very long term. So if you're a multi-month, multi-year trader, it's kind of get the buying boots on here, I would say. But obviously we need to make our money in the shorter term. So let me drill down into more sort of shorter term charts. By the way, actually before I do, what I wanted to do was, obviously I mentioned that I look at bars and candles as well. Just looking at the past 5-6 months, what we saw was 3 big down months there. 1, 2, 3, and then a push down with a long lower shadow. And then last month we saw an inside month, which failed to obviously make a new low for the trend, because it's an inside month. And this month so far, although it's only 4 days in, we've broken through the highs of the last 2 months. So from a short-term perspective, that's got to be, for me, quite a bullish signal anyway, breaking through 2 monthly highs. So that's the monthly for euro dollar. So I believe that we're in the early stages, very early stages of a move up. So that gives me a kind of a bullish bias going forward. Just coming through to the weekly, that's the obviously the same thing there. We can see the bottom of the downtrend there, wave 1 up, wave 2 down here. So now what I do is I'm going to move in a little bit closer to see where we are. So these are weekly candles. So obviously what we've got is a base where the market was trending down. So swing, correction, swing, correction, swing, and then chop, 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 kind of consolidation, if you will. And this is the week so far. We are starting to break higher. So this for me is really quite a significant upside break, even if you're looking at this for the next few days. If it doesn't turn out to be the major low that I expect it to be, I think you've still got momentum in your favor, just purely based upon this pattern breakout. So that's how I see it in the very short term. So we've broken through a lot of these red candlesticks here, and it looks like the buyers really are in control. So there's potential for a bit of vertical upside movement, I think, from here. If we can now zoom into the daily, So this is where we are now. So basically, you know, I mentioned that the whole thing is kind of Elliott wave based, and you get 5 waves in the direction of the trend. So what you should be looking at for is 5 mini subwaves in the direction of each impulse wave higher. So 1, 2, 3, 4, and 5, then a correction. 1, 2, 3, 4, 5, then a correction, and then it goes again. So to me, it looks like we've seen a kind of a 1-2 and a 1-2 kind of thing of a smaller degree, and this is kind of the early stages of that third wave higher. So we've broken through all of these levels. Obviously, the day is not finished yet. It's looking like it's going to be a very, very positive. We've only got a couple of hours, 2 or 3 hours left for the close of the candle. So a really good confirmed breakout I think we're going to get, which will give us a much higher euro against the dollar. So in terms of where should we get in, that's always, you know, the next thing. One thing is having a view, and the next thing is obviously how can I, you know, monetize that view? What's the best way to play it? Well, obviously we've seen, it looks like 2 very strong consecutive upside bullish candles. So typically I would say after a couple of candles like this, you'd get some kind of sideways move, maybe for a couple of days. So from a trading perspective, I would want to really wait for a bit of a pullback. It might be a sideways for a couple of days, and then that gives me the kind of the impetus to say, right, let's go for this and go for a good you know, move higher into the 107s. All with me so far?
Yep. So far, yep.
Perfect. And another thing I'll say is obviously once we get this close above these highs, which it looks like we're going to do unless something really miraculous happens in the last hour or 3. Obviously, what often happens when you get a breakout of a pattern or anything, very often you'll get a retest. So this could be one of those situations where, you know, we get the strong close and then we'll get a bit of a pullback, because I think we've got non-farm coming up on Friday. So maybe there'll be some kind of you know, correction or hesitation going into non-farm, that kind of thing, which will give us a you know, an opportunity to get in ahead of the move higher. With regards to short-term targets, as I say, I think it looks to me to be, you know, we should be really sort of doing into the 107s, 108s over the next week or 2. That's really what it looks like. It looks like there's so much pent-up demand that we've literally just started to unleash today. It looks like very, very early days. If you consider, if you go back to this breakdown in November and think about how significant that was. So we had, you know, a big down month, then a down day, a little bit of sideways, and then, you know, several days in a row down and correction like so. So it wouldn't surprise me to see this kind of, you know, maybe a little bit of chop at some point and some more vertical action to the upside. Let's zoom into the shorter term action. Let's go. So on a 15-minute basis here, for example, I guess if you were looking for, and again, I think it does come down to time frames. You know, Sam, your time frame obviously is very short because you're scalping. If you're looking for maybe a 50 pip move, then it might be a case of, you know, playing a little pullback down to 105.60, back to previous resistance. Obviously, you know, technical theory holds that resistance when broken becomes support. That could be something to look for should we get a minor pullback. But again, I wouldn't want to trade against it because this looks like such a significant break. Sometimes it's good to have a two-way an approach to thinking, well, yeah, I think this market could fall back 50 to 100 pips. I might play it both ways, but in a situation like this where we've just broken through such a major resistance level, I would be very wary about playing the short side on this, even if I think it's overbought. But the funny thing about overbought markets is they can stay overbought for very long, for very long periods of time, a lot longer than you can stay solvent, I think is the expression. So yeah, I wouldn't necessarily want to be short selling into a market as strong as this. Certainly looking to for the thing to correct lower. So that's really kind of what I'm looking at on euro dollar. Maybe what I'll do now is just flip across to dollar yen just to give you the picture on that side. Any questions, Sam? While we're at it,
So far, so good. Very interesting stuff. I really do like the way you're breaking down, the charts. Any questions from the viewers, please leave them in the comment section, whichever platform you're viewing this on. We can see all the comments, so please bring them in. We'd love to hear from you all.
Perfect. Okay. So dollar yen, obviously the US dollar, it kind of very often it will be like a broad-based move, but sometimes obviously when you're looking at currencies, sometimes you won't get the broad-based move. Sometimes the dollar against one currency might not do the same thing as the others. But I think we're in a situation now where we're in a kind of a broad-based dollar decline, impending decline. So looking at dollar yen. Now I looked at this chart and I thought, well, how far back can we go? And I wanted to go back a bit further than the 2003. Since year dot, this thing has been well up until until it based out in 2011. It was a long term bear market in dollar yen. So what I can't show you right now is the completion of a 5-wave move at this low, which is what happened. There was quite a clear 5-wave decline going into that major low. So from that point onwards, we had this powerful move here up to the high was 125.85, and then a correction of that move. So sideways range, and then obviously the breakout. It turned out to be a bullish consolidation pattern. If you're looking at maybe triangles or whatever you want to, I guess it would be a descending triangle on that bit there. If you put the trend line in, then it breaks aggressively to make a new high, corrective pullback up to a new high, and now we're starting to see this chop kind of sellers coming in at these extreme levels. So for me, in terms of Elliott wave, if again you're into Elliott wave, not everybody is. I would say that's the end of the 5-wave decline. We've had an A wave up, a B wave down, and a 1, 2, 3, 4, 5 wave C up. So we're talking about a 3-wave advance from the 2011 low, which breaks down as ABC. Now, it's one of these things where if it does start to blast higher, then obviously I'd need to reconsider, because none of these things are really set in stone. But this is really what kind of what fits for me in terms of the pattern and also the longer term outlook on the US dollar, the longer term bearish outlook on the US dollar. And actually, before I kind of break this thing down into more technicals, one thing I wanted to say was I'm not a fundamental analyst by any stretch of the imagination, but from time to time, news can play quite an important role. One thing I will say about the dollar. Now let's just now I wonder, can you see you can see the chart which I put on the screen. I think I don't think you can see the attachment.
I can still see the chart. Yeah, I can't see attachment. You'd have to, if it's a separate window, you would have to.
Okay, let's go back to that. Okay, 1 second. I just wanted to show this because it's an interesting one. So stop sharing, present, share screen, and then let's see, present. Image file. Let's see. No, that's not right.
So to any viewers, if you have any comments, sorry, carry on.
Maybe,
Howard.
Yeah, sorry. In fact, what I'll do is I'll kind of talk you through it rather than try to get. I'll figure out the technology. So basically, Sure. I mean, so one of the things that makes me really bearish on the US dollar, apart from the technicals and the the Elliott wave in particular, is the fact that we've recently had a change of administration. Now, I don't know. It's relatively, I guess, common knowledge to a certain degree that if you go back to when the dollar floated back in the early 70s, in fact, during the Nixon administration. Since that point in time, Republican administrations have typically seen a double-digit percentage decline in the value of the dollar, and Democratic ones have typically seen a double-digit advance in the value of the dollar. And this is based on inauguration day, so I think it's January 21st. So just quickly going back over the last few. So we had George W. Bush down 29%. In the dollar, Obama up 24%, Trump #1 down 13%, and Biden up 17%. So it's kind of followed the pattern going back to Nixon. So that's kind of something else which is kind of putting me on the bear tack on a bigger picture view. Now a lot of people say, well, it's nothing really to do with the government. It's really about the Fed and the monetary policy. The interest rates are driven by the Fed, but I think that the administrations typically do have a large amount of influence on what goes on, and I think that Trump would like to see a lower dollar, so that would kind of tie in a little bit. Let all the other countries have the problem of a stronger currency. We'll have the weaker currency, and we'll sell more goods, kind of thing. So that's just one of the things that that comes in, part of my backdrop of being bearish on the US dollar. Let me just go back to the screen. Let's have a look. Share the screen. Okay. So back to dollar yen. So I believe that we've made a major top at 161.95. That's the that's what I think we've done. Let's see. You got it?
Yep, the screen's up. Yep.
Can you see? Great, excellent. So I think that major top in place at 161.95. So what happened from that point? We had that three red ones down monthly, and then a kind of swing higher, pullback, swing higher, failure, and now we're starting to break down. These are monthly candles. So there's something a little bit, I think Sam, you were talking a bit about people being trapped. I think there's a lot of people trapped up here. Those people that bought the breakout of the, and you can see it better on the weekly chart actually, which I'll flip to now. Just one sec. There we go. That's it. Yeah. So the swing high here, pullback, and I guess a lot of these people thought that it was a corrective pullback in the uptrend. It went up, pullback, and these are the guys that I think are trapped. We had the break of this swing high here, so it breaks up, settles above it for a bit, and then it starts to ease down. So that this is the kind of the selling coming in. So I think that we are headed down to back down towards this low for sure. That's really what I'm looking at. If I'm right about the bigger picture, then that breaks, and then we start to see some really ugly acceleration lower. Let's drill down to the daily. Okay, just getting used to these these charts here. Okay, so daily wise, let's just expand it up. So a nice clear kind of downtrend from that 158.87 high. So we're swinging, swing down, correction, swing, correction, swing, correction, complete a couple of days, yesterday's high. So today it's had a crack at the low. It looks like it's forming a bit of a long lower shadow. So I guess there'll be people coming in at the close of today. It'll be quite interesting. I think people will be coming in, seeing this, thinking it's the bottom, and that's where I think some of this trap stuff comes in. I like the traps where I like what I like to call maybe double traps, where the buyers come in thinking it's the trap, but then the next day we see the real move, which is just a continuation of this. So it can play out in in a couple of days. So today an attack on the swing low, a bit of a bounce. So there are people that are kind of sold the break of that are kind of losing money, so they're covering their short positions. So again, as with euro dollar, it wouldn't surprise me to see a little bit of sideways chop for a couple of days, and then we start to see this continuation of the downtrend. So as I say, dollar yen, I think what we're doing is we're heading down, through these lows. Actually, there's that big support down there as well. I forgot to mention that one. That's quite important. That looks like quite an important low as well. 148.64. So 148.56, 148.64. So they've had a crack at it. Hasn't closed below it. So that'll be an interesting one for tomorrow. It might be one of these things where we come in after the Asian session tomorrow, and we find ourselves back down towards the lows again. That'll be quite interesting if we get that. I mean, one thing I like to do is, as well as looking for those what I like to call double traps, is I like the idea of selling the break of a strong day, because we know that there are people trapped if you sell the break of the low of a strong day. So strategy wise, rather than say, well, rather than sell into the second day of a decline where there's a strong chance of a pullback, it's nice to see at least somebody come in and buy the market. You want to see people come in and kind of turn the market from oversold to what I like to call undersold. I like the market perhaps to be undersold before I want to sell it. Excuse me. Any questions so far while I pause for a slurp of coffee?
I'm good on my end. Very well explained.
Perfect. So yeah, so let's perhaps drill down into, take a look at the 15 or the 30. Let's go 30-minute on this one. Okay, just to take a look and see where we are in terms of shorter term stuff, because it might sometimes we can get the clues obviously from the shorter term the charts as to trade location. So we're seeing a kind of 1, 2, 3, 4, and 5, and a pullback into the consolidation. So it would be good, I think, from a shorting perspective, to come in maybe after the Asian session and to see that we're kind of curling over again on the way down. I think that would be a kind of as far as market timing is concerned, wait for this thing to spend a bit of time here, not blast higher, and start to top out, and then have a crack at the downside. Yeah, so I think, but obviously for the time being, we've had the push through the level, and now we're seeing a bit of a short squeeze. So let them try and squeeze it. Let's see how far they push it, and once that runs out of steam, then that will be a good perhaps a good signal to have a crack at the short side of the market. Okay, so that's dollar yen. I was only going to talk about 2 markets, but is it worth looking at something else?
I think we have the time, to be fair. Let me have a look. Yeah, I mean, by all means, you're more than welcome to look as many markets as you want. If we have the time, we do have the time. So
okay,
by all means.
Yeah,
I can't really see anything major on my end.
Yeah.
I mean, there's a few things I could explain a little bit later on my end, but for now, I'll say it's all yours. Yeah.
Okay. I mean, one thing I was thinking about Bitcoin, because it's come into the public consciousness and domain of late, particularly. Interesting when we talk about traps, how that these are daily candles, by the way. the news related move a couple of days ago, the Bitcoin into the reserve and everything, the fundamental news where it was really positive for Bitcoin and some of the cryptos, the next day completely reversed. So sometimes that kind of good news, bad price action can give you a bit of a clue as to who's holding the balance of power in the longer term. When a piece of news which should be bullish doesn't keep the market up, that gives you a bit of a clue that the bears are really in control or gaining control. I used actually just thinking about that's quite an interesting concept. Good news, bad price action. When the US CPI came out, I think we're going back a couple of weeks. It was stronger than expected. So the CPI was a bit more inflationary than expected, and the US dollar shot up on the back of the stronger than expected CPI. Now, again, what happened over the course of the next day is that move was completely reversed. It might be good just to go back to the chart just to show you euro dollar. No, it's not laying down. Major breakout. Was it February was it down there? I think it was in February. I think it was it here? I think it was the 12th of Feb. Yeah, it was basically here. So what we got was the market on the news, euro dollar collapsed, but by the end of the day, the euro was making new highs. So in other words, what you had was the fundamental sellers of euro dollar, buyers of US dollar, were completely trapped in terms of they anyone that went short on the news were stopping themselves out, and that really gave you that move for the next few days, which led to just topping out ahead of the recovery high, and now we're starting to see the real move kick off. So I think it's always good when you are looking to make a trade, if you're looking for pieces of the puzzle, if you can get a fundamental trap in there as well, that can give you some extra confidence, I think, in a particular trade. Obviously we've got non-farm payroll coming up. That's one of the big ones. CPI, sometimes interest rate decisions, they can be quite good. It's always good to look for the reaction. What's the expected number? What's the actual number? What's the reaction afterwards? And then keep an eye on the market for the next session or two and see whether that move gets reversed. Because if it does, then it tells you that there's a lot of fundamental news traders that are on the wrong side of the market. So I do like to look at news from that kind of perspective, to find out again who's on the wrong side of the market, who's likely to be trapped, because it's markets can be quite crazy when you look at them. If you come in and for the first time and you look at a price chart and you think, why does it do all this all these ups and downs, and a lot of it really is just to do with market positioning, the fact that somebody's on the wrong side of the market, and then they chase it back the other way because they want to avoid loss. And I liken it a little bit to a kind of an upside and a downside auction. You get these spurts of people bidding the price up like crazy. Then you get an auction in the opposite direction, and then they're chasing the price down like crazy. So you get that kind of it appears to be random, but if you know that the driver of the move is very often a market trap, then you're waiting for them to happen, basically, I think. And from what Sam you I think your one of your methodologies is you wait for the trap to happen, or you look for high probability that a trap is in place.
Yeah, absolutely. That's pretty much the only thing I like to trade. Like earlier when I was saying, oh, there could be a good position here to buy. Like I'm just looking at the chart now, and it would have been a great buy trade, a good time to go in long. But like I would never, just because it's out of my usual, like I have very strict parameters, right? And breaking it, even if it works in your favor occasionally, doesn't necessarily mean you should get used to breaking those rules, because it can lead down a slippery slope.
Yeah.
So yeah, I only do one setup, one kind of area of the day, and that's it. And
Yeah,
one
no,
trade.
that's fantastic, because you've got your niche. You know what you're looking for. You know how many chart patterns and how many markets are there that you can. The thing is, your trading capital is finite. It's limited. So you have to be very selective about the markets you look at, the time frames you look at, and the patterns or setups that you trade. So that sounds really sensible to me.
Yeah, I mean, it's what works for me. You know, I have done the old back in the days where I used to try and trade every potential setup. It never ends well. It never ends well. You just get confused, and you end up, I don't know, you're just constantly in the market then, especially as a scalper. You're always in the market, and it's just, it never works out.
Yeah, and it doesn't matter how mechanical you want to be. Even if you're a black box algo trader, you're still going to feel every swing. You know,
Exactly.
that's we're all, at the end of the day, we're all humans, and you're going to feel every swing. So that the best you can do is find a methodology that works for you, control your risk, and just go with it. You know, I think that's the way to the way to go.
Absolutely. Always have a structured approach to trading. You know, if you break that structure, you're borderline on the, you might as well be gambling. But if you have a structured approach, and it's like that with anything in life, I would say. If you want to be good at something, there has to be some kind of structure associated with it. You know, the best athletes, the best, you name it, they got there with a structured approach, right?
Yeah.
So yeah, and it's the same with trading. It's like any other skill.
And I'd say also, just to add to that, I think some of the best athletes and sportsmen out there, they spend a lot of time practicing their art, or the science, or whatever you want to call it, their discipline. I spend a lot of time looking at charts, and if there's a move that I didn't catch, why didn't I catch it? Is there something that I can do to catch it next time, or is it a move that I wouldn't be able to catch, because if I take every single setup, then it's more 50-50. It's good to spend a lot of time, studying the markets, and just playing back, and also your own trading as well. You know, it's good to sort of look back and say, what did I do? Why did I do that? Did I do something? Did I follow my rules? If I broke them, why did I break them? Maybe I can change the rules, tweak them a little bit for the future.
Absolutely. And you almost develop, like, I don't know if it's the same with you, but with me, you almost develop kind of like a gut feeling. I think once you still stare at enough charts for enough hours for however many years, you don't always know exactly why, but you just kind of get that kind of little gut feeling to help you almost. Like when you know if a trade's not going to go well, or if you know if it's okay, this is going quite good, and I think this will be all right. Or I can't explain it as well. I think it's just somewhere in the back of your brain, you've seen this setup before, and it's just kind of putting it all together subconsciously maybe. But that comes again, you have to just stare at charts essentially. There's no easy way around it.
Yeah, and you start to internalize them after a while, don't you? You kind of, as you say, you get almost like an extra sense. You almost know that something's going to happen. You can never know with certainty about anything, but sometimes you can get a really good idea, and that's when you, if you're going to be increasing your sizes, then obviously not by too much, but by enough to matter. That's really when perhaps when you should be looking to do it.
Absolutely. Baby steps.
Baby steps. Yeah,
absolutely. I'll share my screen real quick. I'll go over.
Go for it.
Present, share screen. And
shall I stop sharing?
You don't have to. I can remove it and then replace that. Boom. Okay, everyone should be able to see it. So where we left off earlier it was just pulling back. And like I said, there was a good opportunity to buy here. There's a good chance these buyers are going to defend, this volume. And they ultimately did. Came down, they defended it and pushing it back up. And then this is the next area of interest for a potential short. Doesn't mean it's going to drop down, and start a bearish trend. Absolutely not. But maybe potentially if you see enough volume come in the market, which we're actually seeing, a huge amount of volume. I'm actually very shocked about today. Today the volume is ridiculous today.
Sorry to interrupt.
Yeah,
if I may, could it be because the dollar is starting to break down? There is some money flowing, into and out of the markets. There's the markets are kind of moving as such.
It could be. What I did notice though, is now this is the depth of market on TradingView. It's not particularly great. I have a different depth of market, but it's from a different program, so I can't share it at the same time with this. But it shows more levels. Normally on the depth of market, you will see, heavy volume. You also see heavy pending orders, big limit orders, right? On both the buys and sellers. The pending orders aren't actually, I didn't see anything too extreme. So what I'm basically getting from that is that these aren't just heavy areas where there's a lot of, pending orders, a lot of stop losses, a lot of take profits, nothing like that. These are areas where people are executing market orders and huge amounts. And that is a bit unusual. I mean, look, anything can happen in the market, but today it's very unusual. I will definitely be doing a bit of fundamental research as to exactly what could have potentially been causing this. But today it is extremely heavy for the S&P 500. It's never that heavy. I mean, if I go back, I just zoom out loads and just kind of go back, I don't know, a few days, and you can kind of see around the same time, especially at this time as well. I mean, market open, sure, it gets very heavy, but normally at this time it dies off a bit. But we're seeing extreme amount of volume still being traded, which is very odd. So this would be about okay, well, this is definitely okay, this data. All right, well, this doesn't really prove my point very well, but I'm pretty sure this data is inaccurate. There's no way that volume was traded. Yeah, there's something wrong with this data. I think TradingView has not kept the footprint data too accurate of previous days. Because something doesn't, that's definitely not right. I've never in my life have I seen, thousands, like 4,000 contracts and like a candle like that. That just doesn't exist. So this data must be wrong. Okay, let me go a bit more of an earlier day, maybe not something too far away. I think the data is a bit off. Well, let's go like, I don't know, to yesterday maybe. So if we just quickly, where am I? I've actually lost where the hell I am now. Let me scroll to the back again. There we go. And now scroll out. Sorry about this, people. This is okay. So Tuesday. We're still on Tuesday. Where is the turnover? Here we go. All right. So that's the turnover the market. We're looking at UK time 7 p.m. Yeah. So like normally you would see relatively smaller numbers. I mean, again, 4K, sometimes you do get huge numbers appearing out of nowhere. But overall today, I mean, yesterday was, again, a very heavy day. We had a huge drop yesterday as well. This massive move. Both today and yesterday was very heavy on the S&P 500. It's a shame that the data is actually a bit off on these days. I'm telling you now, there's no way that data is correct. I mean, I've been trading it every day. I've been live on these markets, and I never spotted anything close to that. So I can assure you that data was wrong. But like, just go to the previous trading sessions. That's for the viewers. If you want to see like a normal day, go to like my very first trading session in the series, and you'll see like the kind of normal numbers you expect on the S&P 500. Rarely even breaks 1,000 on a single price level, but we're seeing huge numbers being broken today. I'm not sure why. But I am going to do some research. It might just be
is there something on a daily chart? Can you see daily volume, and is it one of those things where you know at major lows you get massive volume? It might one of those things, or I don't know.
Very well. Let's have a look. Let's switch over to a daily chart. Let's see. Oh no, not custom. Don't want that. I mean, we did break a low today. We did break a low, you know, that was back all the way in January. So there was technically a break of structure. I mean, it did reject it and it just wicked out. But at that time, as it was breaking, I'm sure many people thought that, you know, could have been an actual breakout.
A lot of stops under there.
Yeah, exactly. I think that is probably where a lot of the volume's coming, a lot of liquidity under there. But normally you would see that in the depth of market, but I didn't see that in the depth of market. So to me, I'm leaning more on the side that these were actual market orders, people, you know, entering without using limit orders. I may be wrong, but nevertheless, a very heavy volume day for, I mean, you can kind of see it. In the last few days, there's been very heavy volume. We haven't even finished today. We're already near the top. If you're just looking at the bare volume at the bottom.
Yeah, it looks like it's been quite high last few days, huh?
Yeah, the last heavy volume was 18th of December, where it got near there. And the last few days, it's been extremely heavy. And I think maybe today, we could actually probably break yesterday's volume. But normally, like on a normal S&P 500 day, like you're looking at, you know, a bit lower down. This is, I mean, it's been one of the heaviest days in a long time. Last time we had a heavier day was all the way back in August.
Yeah.
So again, not entirely sure, but it doesn't, I mean, volume is it's a double-edged sword. It can, if you're on the right side of the market, you love volume. If you're on the wrong side, you hate it. Personally, I like seeing heavy volume, but you kind of get conditions. So the way I trade is I like to look at anything over 1,000. I take immediate look at, right? But since today 1,000 really wasn't even that special because it's happening very often. You know, over 1,000 contracts on the Delta many times. You know, you got to bump those numbers up, and you got to start looking at maybe 2,000 is more extreme. But on a normal day, you know, 1,000 is quite extreme. So you can kind of, you know, if you see it, you're like, oh, you pay attention. But yeah, today is just one of those days where the volumes are very heavy. So, like I said, for me, there's no more trades as far as I'm concerned. I could have taken a bullish position there. I didn't. I'll be breaking a few rules, right? I'll be breaking a rule of trading more than once. Once I've done a trade, that's it. I don't take multiple. I just one opportunity a day. I go for it. If it works out, it works out. If it doesn't, it doesn't. Normally, it does work out more than it doesn't. But yeah, I don't try and jump in trying to make back the loss because it's a slippery slope. Right, it would have worked out if I did jump in for that buy, but you can't think like that because the next time you do it, it might not work out. Do you know what I mean? You're breaking a fundamental rule of yours, it might not work out, and then you've had double the losses. And the idea is you never really want to dip too much in your equity curve, right? There's always going to be little dips, right, in your general equity curve, or in your equity graph, so to speak. But you're always gonna have little dips on days where it's just not working out for you, you know. But you don't want those dips to be extreme. So if you're training too much, if it's just not your day, if your setup didn't really work, just leave it. Like, it's just not your day.
Yeah, there's always another day, always many opportunities ahead.
Exactly. Come back tomorrow, you'll probably be absolutely fine. It'll start working out again. But if you try and chase that loss, because what happens if you lose twice in a row? Very hard to start walking away then. Now you're determined, right? I have to make, oh, this is terrible. I have to make back my money. You trade again, you trade again. And you know where it's going to lead. Ultimately, you're going to lead blowing your account, or maybe not blowing your account, but you're going to lead with a significant loss that you would never have had if you just stuck to your guns, one trade. And that's just my way of doing it. Other people have different methods. That's absolutely fine. Do what works for you. But for me personally, I like to be very strict with those rules. Even if I do see an opportunity afterwards, it's fine, because I haven't broken the fundamental rules of mine, and that's all that matters. And I know as long as I stick to those fundamental rules in the long run, at the end of the month, I will have a nice amount of money that I've made in the markets. Do you see what I mean? And it's really, at the end of the day, I'm not withdrawing every day, right? I don't need the money tomorrow. End of the month, that's when I take my money. Usually I take a certain percentage out of the market, right, or out my account. That's it. Don't really need to, I don't need to make the money tomorrow or today necessarily. You can, as long as at the end of the month I'm up, I'm happy with that. So just stick to
a marathon. It's a marathon rather than a sprint.
Exactly. And I know it's very hard to kind of get that disciplined. But there are many tactics you can use, like literally writing the rules next to your screen. You know, get a piece of paper out, pen and paper, write the rules down, stick it on your screen, not on your screen, but next to it, or, you know, it could be like a post-it note type thing. And every time you're about to break one of those rules, just look at it and, all right, no, I'm going to stick to my guns. That helped me at the beginning. That's a good, but you know, other people might want to try something else. Maybe you want to, I don't know, punish yourself if you do break the rule. Maybe you'll, you know, ban yourself from having a takeout or takeaway or a chocolate or whatever works for you. You know, I mean, but do something to keep yourself disciplined. Because if you're not honest with yourself and you're not staying disciplined, it's very, very hard to make money in the markets, and that's ultimately the truth.
Yes, so sometimes it's difficult, kind of being honest with yourself, you know. But if you bring in a third party and you kind of you tell them what you're doing, someone that you know and you trust, you become a bit more accountable. I mean it's a bit of a random one, but if you can find almost like a sparring partner, someone that you can say, well, look, I'm buying S&Ps because of my rules, and at the end of the day, you can you go back and you can they can, if they know roughly what the rules are, they'll tell you when you're breaking them.
Exactly, 100%. We do have some comments. So Robert commented, bear with me 2 seconds. He said, that makes a lot of sense. I got into golf recently and I want to eventually get good enough to play in tournaments. So I study and practice specific things in my swing in order to get as consistent as possible at it. I'm bridging the gap between people who have been playing for years, where they are just hitting for distance and just trying to be on the fairway. I'm practicing my distances and specific shots, so I need to make sure I'm doing that with my trading journey. Absolutely. Yeah, trading can be compared with many things. I mean, I actually find similarities in trading with so many things in life. Things are completely unrelated. Oop, I almost knocked the camera over. Apologies. But yeah, I mean, trading really does have, it's a skill that I think if you master it, you become very, you notice its effect it has in different areas of life. It's hard to give you an example, but it's almost like to me, I feel like you can read people better once you become a better trader, because you kind of understand human psychology a bit more, I believe, because ultimately that's all you're doing. Every chart is just a story. That's literally all it is. It's not a random collection of numbers or prices or movements or whatever. It is literally a story of we're talking millions and millions of people. Obviously, there are algorithmic bots and stuff that place trades, but we're just going to say people as a whole, making a bunch of decisions constantly, and you're seeing how that all plays out, like the overall psychology of people. It's like almost like a mass consciousness, right? And you're just reading the story of what is actually going on, what is really going on here, and you're trying to figure out which side is more likely going to be the side that's got a upper hand in the market. That's essentially all I'm doing. But I'm only looking at one emotion. I'm only looking at pain. Pain is the emotion I kind of want to look at. Who's in pain? If someone is in pain in the market, usually a good chance that they're going to have to let go of that pain. If you're entering a huge amount of contracts in the market, you've got a lot of money on the line that goes against you. You're forced to get out. And when you're forced to get out, it works in the favor of the opposite side. You're relieving pressure. You're letting go, and you're also giving liquidity for anyone who wants to get in again. It's literally, that's why it's called trading. You're always, if you're buying, you're taking a sell position from someone else, right? Someone is selling you that position, that contract, so to speak, and vice versa as well. So it's not just about entering, it's about the exits as well. It's always easy to look at and say, oh, loads of people entered here, but did they really enter here, or was that other people exiting? Do you know what I mean? Try read the story of what's actually happening. And like Howard said, when we looked at the daily chart, and he said lots of stops there. Absolutely, that's reading the story. Where are people going to have their stop losses? Where are people going to have to take profits? Where are people most likely looking at, hey, look, this might be a good area to enter? You've got to figure out that. And once you understand that and figure out where those areas are and what is happening, you can make better decisions, because it is ultimately a story. It's just loads of people making decisions, and you just want to be on the right side of the decision. Of course, you're never always going to get it right. There's going to be times where you will get it wrong. But again, that's where your risk management should, in theory, if you do it right, protect you from any significant losses. And that's why the rules are very important. And I know I sound like a broken record now, but it really is.
Yeah, it's good to keep repeating it, because it's very, very important, isn't it?
Yeah, absolutely. And Robert says again, oh wow, yeah, I only recently started looking at my own psychology and the way I think in trading, but I didn't consider also doing that for the whole story of the market. Yeah, absolutely. There's always people, the market is ruled ultimately by emotions, right? I mean, yes, supply and demand and, general economic factors matter, but especially in the short term, it's ruled overall by emotions. Yeah. People getting greedy. Are people getting greedy? Are people getting scared? Are people taking their money out? It's all emotion based, and you can literally see where the emotions are, where people got greedy. I mean, let's look at the bottom here, where before it reversed. Could we see anyone getting trapped or getting greedy? Well, actually, no. So it's a different story. It wasn't people getting greedy. So we had this massive move down, all these sellers, boom, 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 selling like crazy, right? This is the 15-minute chart. I can drop it down to the 5-minute, might give a bit of a better view. There we go. So this massive leg down that we had earlier today, which if I show on the 15-minute might look a bit more clearer. But this move here, basically these candles, these 3-4 candles or 5 candles, Huge amount of selling. So loads of people were selling, and it was going really good in their favor, really good in their favor. And you can literally see that where they started taking profit. People getting out here, getting out here, getting out here. They're taking their money out the market, and it looks like buy orders, right? Because that's essentially what they're doing. If you're in a sell position and you're exiting, it looks like a buy order. People getting out, people getting. You can almost count. You know, if you counted up all these big sell orders, you know, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, about 19,000. You could probably count up the buys and it will roughly be around the same time. And that's just all of those people exiting, taking their profit.
Interesting on the lowest one, it was only green.
Yeah, absolutely. That is, you know, all the pressure being released. And it's almost like a scale in a weird way, right? So it was very much in the sell favor, and as the sellers started releasing the pressure, so it slowly started moving, and equilibrium kind of went back to 50-50, so to speak. And then you get the accumulation phase where no one's really entering the market again. It's kind of, you know, you are getting people entering, but it's kind of accumulating. It's going sideways. No one's really pushing it in any direction, so to speak, right? And you get a bit of sideways movement. And then it just takes extra aggression from the buyers coming in. And you can see how the volume kind of drops off. It goes very heavy here because that's sellers exiting. And then it slowly starts dropping off a bit. We're getting a bit lower numbers. And as the buyers start getting heavy again, these are buyers now entering, making their move, buying, and the market starts going up. So you've got to read it as a story. You know, try figure out, are these people fresh new buyers entering, or are these sellers exiting? Are we at an area where sellers would want to take their profit? Are we at an area where sellers are getting their stops hit? And vice versa. You've got to literally read it as a story. And like I said, sometimes it can be a bit difficult because it can be a bit confusing. It's hard to tell. It can be quite chaotic. But if you focus on the big numbers, you know, the really extremes, you can kind of figure out what is going on. And if you know, okay, these are sellers exiting, now if I see a lot, you know, give it a bit of time and I see a lot of buyers entering, probably a good time to buy. You know, you can make a better decision. But that's essentially it. It's a story. And I think we have just under, what's the time? Yeah, we have about 3 minutes. Robert says, oh my God, thank you. I also recently started trying to figure out the volume footprint and didn't want to ask the dumb questions. So that just explained a bit about the volume footprint. Yeah, no, absolutely. It took me a while as well to figure it out. Because naturally you think, oh, if there's more of one side, it should go in their favor. But yeah, you know, anyone who's traded order flow, they quickly realize that's not the reality. But yeah, try figure out the story behind it, and you'll be on the right side of the market most of the time. Not always, but most of the time. And if you've got good risk management, the times you are wrong, it's not the end of the world, right? But yeah, I hope this session was good. We're about 2 minutes. It will be the end. Howard, it was really interesting seeing your charts and the way you break down all the different pairs.
Thanks.
Great session. Thank you both. Thank you, Robert, for commenting. You were very good.
Thanks, Robert.
It's definitely good to have comments and, you know, people enjoying it and yeah, finding value in what we're doing. So that's also always awesome. But yeah, that's pretty much it for this session. I might as well leave it till it, you know, to the actual 2 minutes. But yeah, join us again. I think tomorrow we got more live sessions. So please do join us. If you would like to keep up to date with these live sessions, of course, subscribe on YouTube. You'll be able to see them. And also Discord is a great channel. We're doing a lot on Discord, and generally speaking, the people on Discord are finding things out first. It's just the way it is, right? So yeah, if you have Discord, join the channel. You can find it in the description of this live stream. There'll be a link as well. Join Discord, and yeah, awesome. Howard, thank you so much for coming on.
Thank you very much. A great session. I've learned quite a bit myself as well.
So have I. Awesome. All right, and thank you everyone for watching. We're going to end it there. I need a nap or maybe a coffee. But yeah, it's been absolutely great. And we will see you all again tomorrow. So have a great rest of your evening wherever you are in the world. And thank you for watching, and take care. We'll see you soon. Thank you, guys. Thank you, Howard, as well.
Thank you.